How are you doing over there? Stop recording. All right, paused. All right, so we're going to get started. Ooh, check out who's here. Sherman's here. Evan's here. Ooh, look at all these people I missed. SM, Rocky, how's it going? Gary, Beverly, Sherman, Panjabius. I really don't know that one, sorry. Cyril Liver, Albert, Haba, Jack, Jamal. Well, how are you all doing tonight? Hey, anyway, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow using pre-qualified dividend stocks, and those are companies that have increased their dividends consistently for more than 20 years. That's 2 decades. 20 years, higher and higher and higher and higher dividends. Why is that? Well, because when the stock goes down, look at this, when it goes down, up, down, up, down, up, down, that's all it ever does. It goes up, it goes down, that's all stocks ever do. James, I shared a video with you. Check your DM after you're live. I'm curious what you think. All right, Hakuna, I'll take that a little bit later. Muscle market, really? Cool. Doc's here again. All righty. So let's jump in. Start up where we ended off yesterday. We have a whole bunch of stocks we went through yesterday. Yesterday we did a lot of explaining, a lot of teaching last night. Questions upon questions upon questions. Instagram having an issue. So I got 4 phones, 1, 2, 3, 4, and this is the only one over here on the far right that's having an issue. All right. No stop trading. Well, cool beans. You and I should have a chat. No stop trading. I'm kind of curious what you mean by that. Anyway, now, can someone let me know? This screen up here is live on YouTube. Can somebody give me a quick check over on YouTube, see how the sound is, and see if it's coming up okay? Anyone? You guys have been here for a while. You know how to do that. You know that this screen here behind me is live on YouTube. All right, so it makes it easier for you to see what these little tiny numbers are, because you can't see these numbers on your phone or on your iPad, whatever you're watching it on. It's got to be a big screen TV or a computer for you to be able to see these little tiny numbers. Just show the same TikTok. Parkis just shows the same TikTok. No, Parkis, there's 2 of them. Mikey G, can you check the second YouTube, make sure it's working? Your Renaissance, how are you doing? All right, so let's get rolling, see where we are. YouTube shows the same TikTok is showing. Yeah, Parkis, I heard what you said. Let me check. Quickly check and see what's on YouTube. Check your Instagram. I did. You sent me a video. I haven't really seen it yet. Live. All right, there are 2 lives. Okay, 1 live here, 1 live here. So YouTube has 2 lives at this moment. One is the screen behind me. The other one is basically what you're seeing here. I'm good, thanks. Hope you're good too. I'm awesome. It's tough being me some days. I have to work at it. Very challenging. Okay, thanks for the roses there, dude. It's very nice of you. Okay, so yeah, they're both up and running on YouTube. Can someone at least let me know if the sound's okay? All right, all these flowers you're sending me. Awesome, awesome, awesome. Thanks for that. Was on the wrong line on TikTok. Got it. Yeah, but how does it sound? How's the sound? Does it sound okay? Okay? No? Yes? No? Okay? Let's get rolling. All right. We have a lot to go over. Do you get real analysis? All right. Do I do real analysis? Florida girl? Oh, F your girl. Well, hello, and how are you? Do I do real analysis? I'm not quite sure what you mean by that. Okay, YouTube full screen, alive and well. Cool. Okay, F your girl. Can you explain what you're talking about? Okay, because I analyze stocks, certain particular stocks. It froze for me on Instagram. Maybe it was my connection. No, it's not your connection. It's mine. Okay, I got 4 iPhones, 1, 2, 3, 4, and the one for Instagram keeps freezing and it says it has a poor connection, and the connector is 5 feet away. Sound on TikTok is awesome. All right, Sherman, way to go. Let's get rolling. Things like Black-Scholes, NPV, IRR mathematics formulas that give you an insight into future well, aren't you the bright one? Okay, let me just give you a little bit of tidbit because you're new here. First of all, this trading strategy I am about to share with you was created for a 9-year-old little girl back in 08. Five criteria needed to be met. Number one, it had to be simple. Number two, it had to be safe. Number three, it had to be consistent, predictable, and no way she could lose. That's the 5 criteria I had come up with in order to create this trading strategy I am about to show with you. Okay, that's why I did not hear your answer earlier. Okay. Sounds good. Thank you. Wait, I'm not done yet. Not done. That's just the 5 criteria. Simple, safe, predictable, consistent, no way to lose. That's the 5 criteria. 5 rules. Okay? Never buy something you do not know, you do not understand, you do not want to hold on to for a long period of time. Now, just for your information, the longest I've ever, and I've been trading for 20 years, the longest I've ever held anything is 9 months, and that was Kimberly-Clark, a very good company. Okay, I bought it, she went down, she came back up, I got out, made my profit. But rule number 1, never buy something you do not want to hold long term because you just might have to. Rule number 2, never sell at a loss. Rule number 3, make sure the company has 20 years of increased dividends. Rule number 4, weekly options. And rule number 5, make sure all the numbers work. Now, considering you're new here, your girl, did you ever work in the financial industry? No. I'm just a poor slob that got tired of all the BS that I was being fed over the years. I found a trading strategy that I created for my 9-year-old daughter. Guess what? It worked awesomely. And I come from the age where if it ain't broke, don't fix it. So it gets a consistent 1% per week. Safe, predictable, and consistent 1% per week. That's all I'm looking for. Okay? Jerry, hold on a second. All right, so hopefully that covers that. Okay, it had to be simple, safe, predictable, consistent, no way to lose. Okay, so never buy something you don't want to hold long term. You might have to. Never sell a loss, defeats the purpose. 20 years of increased dividends, because I'm not going to give my money to a company that hasn't proven themselves that they know what they're doing. 20 years increased dividends, year after year. 4, weekly option. Why? I want a weekly cash flow consistency. There's over 300 companies that fit that criteria. Number 5 is make sure the numbers work. Now, considering you guys are new, Peter, your girl, what do I mean by the numbers? Well, I got Macy's pulled up right here. Okay, now I'm assuming, okay, we all know who Macy's is. Okay, Macy's Day Parade, Macy's Day Thanksgiving Parade, Macy's Day Christmas Parade, Macy's Day New Year's Day Parade, Macy's Day, whatever. They've been doing stuff ever since I was a little boy. Okay, Griffin, what do you say would be sort of a cash balance requirement to run your strategy? Just curious. Now, Peter, I have several different strategies. I share one of them for free here. Okay, it's simple, safe, predictable, all that kind of nice, neat stuff, fun stuff. Okay, now you could start out with $50 if you want, but what we're looking for is a safe, predictable, consistent trading strategy that works consistently. So, if you're looking at a company, now the only companies I look at are companies that have increased their dividends for more than 20 years. Let me read you off a few of them to see if you understand what I'm saying, okay? So I want to look at companies that we all know who they are. So let's look at this list right here just for the fun of it, okay? Just hold on a second there, Peter. T-Mobile, Kraft, Bank of America, General Motors, Coca-Cola, Boyd Gaming, Hewlett-Packard, Occidental Petroleum, Paramount, Mondelez, American Express, Globe Life. That's just one list. And that's just 1 month. Okay? Now, I look at stocks that pay dividends. Why? Well, because when the stock goes down, I want to make sure I'm collecting something. And when I'm collecting, I want to make sure it goes higher and higher. Why 20 years? Well, because if a company has consistently increased their dividends for 20 years, that means they're profitable. Okay, a dividend is nothing more than your share of the profits. Once we, okay, we're the buyers and sellers, we become the investors. Once we buy and sell, I had enchiladas for dinner and just not agreeing with me. They were good, really, they were, but just not agreeing with me. Anyway, so as I was saying, if I'm going to invest my money with a company, I want something. I'm at that age where I'm retired and I don't really have to go back to work. I have a certain amount of money and I need that money to live off of. All right. So I want to make sure wherever I put my money, they have an established business practice of continuously being profitable. Well, if a company continues to increase their dividends every single year for a minimum of 2 decades, that means at least they know what they're doing. And I'm getting higher and higher dividends every year. That's my criteria. 20 years of increased dividends and then weekly options because I want to get paid on a weekly basis. All right. So that being said, let's take a couple more questions before we move on. Hope that answers your question, Peter. Did you ever work in the financial market? No, I didn't. I was just a regular old poor slob that got tired of being jerked around by the powers that be. Here, work 40 years of your life, 40 hours a day, and then you retire and 40% of your pay. You what do you call it? Yeah, give your money to a money manager, and they'll give you a 4% increase per year. Okay, way to go. Can somebody take care of wannabe trader? Never mind, I'll do it. I don't like that kind of crap. All right. Ooh, wow, I missed all these questions already. We're just getting started. All right, Peter, there is no cash requirement, okay? Let me let you know, 98% of all of my money is invested at all times. Well, I've been doing this for 20 years, so it works for me. Okay, I do not suggest anybody do what I do. I suggest you do your own research, see if it makes sense. That's rule number one. Well, my opinion. My opinion be what you take away from your time here with me is, does it make sense? Okay? If it doesn't make sense, don't do it. James, have you thought of creating another TikTok account and show your other strategies? That would be awesome. Yeah, it would be. Those other strategies are invitation only. Okay? And you actually have to be a member of my morning trading group for a minimum of 6 months before you get invited to the other trading strategies. Wow, got something in my eye. Wow. All right. Jerry, can you give me 5K to start? Sure I can, Jerry. Come on down. I can be your son. Sure you can. Nothingness. PLTR doesn't have dividends. That's a no. Sorry. Baikel Muska. I can't read that. Hello, how are you doing? Okay, nothing, guys. PLTR is a no. Okay, thank you. You're welcome. Do I option trade? Of course I option trade. Did you renew your calls for that stock every week for 9 months? Of course I did. For 9 months. All right. I carried Kimberly Clark for 9 months. I got 3 dividends. Okay, every 90 days they pay a dividend. Great. Well, 3 dividends. I got like what was it? 12 or 15 premiums. Take a look at the month. All right. Okay, Hewlett Packard pays a dividend. Okay, right there. If I buy it here, I collect a premium, dividend. If I hold on to it and I don't sell it, premium, and I just keep on going. Why? Because it's cash flow coming in. Okay, once I buy it and I own it, I can do whatever I want with it. So why not, before the dividend, buy it 2 weeks before the dividend? Because these little dots right here represent the EX date. The EX date is the last day the stock trades before they pay the dividend. So the Hewlett Packard has an EX date on the 12th. Well, the 13th is the date of record. Whoever owns the stock on the 13th gets the dividend, which means you got to buy it before the 12th. Okay, so you buy the stock 2 weeks before, collect a premium, grab a dividend. You just increase your returns by over 300%. Rather than getting just one dividend, which, what is this? 27.5 cents. Okay, what is the premium on Hewlett Packard? Hold on, let's check it out. EQ, Hewlett Packard. All right, that 3637. Great. Check it out. If I buy it, okay. Now I'm hoping you guys understand what we're looking at here. Up here is the information on the stocks. Okay, the high, the low, the open, the close, the bid, the ask, the volume, all that kind of nice, neat, fun stuff. That's on the top line right here. So first thing Monday morning, I could buy it at this price right here, 36.87. Great. Well, if I buy it at 36.87, I sell someone the rights to buy it from me at 37. I'm collecting 23 cents a share. Okay, so what does that mean, 23 cents a share? Okay, it's almost the same amount as a dividend. Let's clear this. 23 cents a share. The stock price is 36.87. So that would give me a return of 0.6. All right, so 0.6 is not what I'm looking for. I probably wouldn't do Hewlett Packard, but just for the argument's sake, what is 0.6% every week for 52 weeks? Because there's 52 weeks in a year. That's 32% a year on Hewlett Packard. I only do stocks that you've heard of. Very rarely will I jump into a stock that nobody's ever heard of. Okay, Wannabe Trade, we got rid of him. From what I've seen so far in terms of covered options, I'd say at least 50,000 to 100,000 in an account. All right, well, Peter, 1% a week on a $50,000 account is $500 a week. All right, that's $25,000 a year. A $100,000 account is $1,000 a week, or $50,000 a year to make it worth it. Now, I'm not quite sure about you, but I can live very comfortably off of $1,000 a week. Okay, 10 minutes a day. All right. Do you sell calls on the EX date week? I try not to. Let's go back to the calendar again. I'll give you a brief little explanation. All right. So Mondelez is paying right here. This is their dividend, right? I like to jump in 2 weeks before the dividend on a Monday. Okay, here's the dividend right here on the 28th. 1 week, 2 weeks, Monday. So if I jump in on a Monday and I buy the stock at the market price, what is Mondelez at the moment? MDLZ. At this moment in time, 66.51 is the stock price. If I want to buy it first thing Monday morning, 66.51, I would go for the 67s, and it's not giving me a number. Why is it not giving me a number? It's not giving me a number. That's not good. Okay, there it is right there. It's between 120 and 240. So, the 66.51, right? If I buy it at 66.51, I can sell it for 120. That's over 1%. Okay, so how do you figure out the 1%? Well, that's easy enough. You take the 66.51, $66.51. You take the decimal point, move it over 2 spaces. 66 cents is 1% of $66. Okay, so if it's paying 120, that's almost 2%. All right, so if I'm collecting 2%, I'm all for that idea. But what is the chart telling me? Because when I say it's all about the numbers, okay, safe, predictable, consistent. Don't get old. It's no fun. You forget things. Never buy something you don't want to own long term. Never sell at a loss. Make sure it has 20 years of increased dividends, weekly options, and number 5, rule number 5, make sure the numbers work. What do I mean, the numbers? What am I buying it for? Okay, if I'm buying it for this price, I'm going to sell someone the covered call at the 67 because it's the closest strike price to the purchase price. So if I'm buying at 66.50, I want to sell the 67. We already figured out it's $1.20. Okay, so what is the chart telling me? Well, there's 5 things. It's like a whole bunch of 5s. A whole bunch of 5s. 5 things I want to look at on the chart. 1, the high. 2, the low. 3, where was it a year ago? 4, where is it now? 5, what direction is it going? Okay, that's the 5 things I want to see. That's the 1-year chart. I like it. Great. Let's zoom in a little bit and take a look at the last 90 days. Okay, last 90 days. Exact same thing. First thing, the high. Second thing, the low. Third, where was it? Fourth, where is it? And fifth, what direction is it going? Great. I like that also. It's not that bad. Okay, so let's go to the last 30 days. Okay, again, exact same thing. High, low, where was it? Where is it? What direction it's going? Now, where is it going to go in the next 5 or 10 days? Well, interesting thing about buyers and sellers, we kind of do the same things over and over again. So let's take a look. She was high, 30 days goes to high. She drops down, finds the bottom. She goes back up, comes back down. Now she's going back up. Okay, down, up, and she's only at 66.51. Where's the 30-day high? The 30-day high is way up here. Look at where it is. You've got a long way to go to challenge that 30-day high, because it can only be one 30-day high, and there can only be one 30-day bottom. The 30-day high, 30-day bottom. She goes down. Now she's going back up again. It's actually that simple. All right, where are we? Happy Saturday, Bo. Good for you. All right, down. What's the stock? The stock is Mondelez International, especially Michael Dell and everything he's doing recently. All right, Peter, I think I missed what you're saying. All right, happy Saturday. I saw that one. Okay, Picaris, did you renew your calls the week that stock from the 9 months? Yes, I did. Okay, so I always sell a call every week on everything I own. What is the YouTube name? It's The 10-Minute Trader. Okay, if you ever seen any of my videos, it always comes out to, hey, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. Okay, The 10-Minute Trader is my website. It is my podcast. It is my Patreon. It is my YouTube. All that kind of nice, neat, fun stuff. YouTube username, The 10-Minute Trader. Got 2% on MTW last week, thanks to you. All righty then, good for you. I'll expect my cut in the mail. $1 to $5, just playing around. For covered options, personally, I'd say I want 50,000 at least. Okay. I bought HPE. Why would you buy HPE? Let's take a look at HPE. Hewlett Packard Entertainment. Ew. Why? Okay. All right. So let's take a look. First thing I want to take a look at is what does the number look like? $20.94. The closest strike price is going to be the 21. The 21 is going for 30 cents. That is well over 1%. Okay, great. Next thing I want to see, what does the chart look like? High, low, where was it? Where is it? What direction is it going? Would I have bought it? No. Look where it is. It's at the high of the year. There can only be one high of the year. And once you buy that high of the year, what makes you think it's going to go higher? Okay, it could. It also could not. Okay, I don't like it. Once it hits a high, fine. I'm going to wait for the bottom. Because I make my money when I buy low, sell high. Well, how do you do that? Well, you look. It goes down, it goes up. 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 So once you isolate 30 days, okay, it's relatively easy to see. It was down, she went up. She came down, she went up. She came down, she went up. She came down, where's it going to go next? Well, most likely it's going to go up. Did it? Oh, yeah, see? She went up. She goes down, she goes up. Especially Michael Dell, everything he's doing. All right. You don't care about what stock price is when jumping in, or does it solely have to meet your criteria? All right. Interesting name you got there. I really don't care about the stock price because, number one, it's a good stock. If it wasn't a good stock, I wouldn't be looking at it. It has to have at least 20 years of increased dividends, which means the company knows what they're doing to be consistently profitable for 20 consecutive years to continue to increase their dividends. That's the biggest rule for me, the absolute biggest. The second is weekly options because I want weekly cash flow. Now there's over 300 companies that actually do that. Okay, we checked last week, 9,552 companies that you can invest in at any time. Anytime you want, you can buy 9,552 different companies. I only look at 300 because only 300 meet my criteria. 20 years of increased dividends, weekly options, and then I jump in and I take a look at, well, what's the book value? What's the earnings per share? How consistently have the earnings per share gone up? What are the profit margins? What is the cash flow coming? All that kind of information. Once I go through all that, then I put it into my calendar. Okay? Now, the calendar tells me when to buy the stock because the calendar tells me when are they having their EX date. The EX date is the date before they pay out their dividend. Why was the dividend? Well, I don't really care about the dividend per se. All right? So look at this, BBY. The dividend is 94 cents. Do I really care about the 94 cents? No, I really don't. I'll take it, thank you, but it's not my main attraction. My main attraction is the fact that here's where they pay their dividend. Okay, before they pay the dividend, 2 weeks before they pay the dividend, more specifically, on a Monday, the stock has a tendency to go up. So if we're looking at BBY, first thing I want to see is with BBY is what am I paying for it? $90.99. Okay, the closest strike price is going to be the 91. That's 87 cents. That's right around 1%, just a smidge below. Now, high, low, where was it? Where is it? What direction is it going? Great. I wouldn't do it because look where it is. It's at the high of the year. I don't like high of the year, and I don't like low of the year. Well, I kind of like the low of the year because you can't get any lower than the low of the year, especially when you're buying low and selling high. You have to get to the low, and then for it to turn around. Look, she goes up, she comes down, up, down, up, down, up, down, up, down, up, down, up, down. That's the low of the year right there. That's the best time to buy, at the bottom. Because what happens when you hit the bottom? Well, then she goes back up again. Okay? I'm not one of these guys that say, look, I'm going to buy it here. Oh, wait a minute. Then it goes back up to, no, I look at 5-day periods. I'm doing 1 week at a time. All right. Super Paint Epoxy, cool. Lonnie, cool. Picaris, Picaris had something to say. Meet the criteria, yep, Picaris, where are you? Nog Entertainment, it's Enterprise, HPE. Well, okay. Not, okay. Hey, Mike is here. Hey, Mike, what's up? Alaya, is that right? If you often lose money when trading, maybe you can talk to me. What day are we in? We're in week number 20. Week number 26 starts Monday. Okay, week 26. So I've been trading every day. I've been here live every night for 25 weeks. Okay, 25 weeks. Okay, I lost one position this year. That's it, only one. And that was, what the hell was it? Abelmo. That's the only position I lost. So, Alaya, I lost one position so far this year. That is it. It was only $600. Okay, so I appreciate you wanting to help me. If you really want to help me, send me your phone number. I'll give you a call. Maybe we can chat. Maybe you might be able to help me. I'm always willing to look at something new that could improve my trading, as long as it's simple, safe, predictable, consistent, and no way I can lose. If you got that 5 criteria, I'm more than happy to listen to what you got to say. I can teach you to make profit through options. Well, alrighty then. I'm willing to take a look. I want to see what you got to say. Log entertainment, we got that one. All right. Can I just give you my account info and you do my trades for me? Jerry, I actually do that for people, but here's the thing. I have to know you, and I don't know you, okay? I insist on, and I do trade for some people, but I insist on an eyeball-to-eyeball handshake type scenario deal, which means you got to fly to Florida, take me out for some lunch, we'll talk about it and see if this is even something you want to do. Picaris, looking at joining your group, do you have more education? I'm a stock trader, know nothing on options. Okay, Picaris, try it for a month or two. It's only $100 a month, so you throw $100 at it. It either works for you or it don't. Okay, mostly everybody in the trading group makes over 1% per week. I mean, that's our goal. So, Jerry, if you want to do that, send me your number. I'll give you a buzz and we can chat. What platform are you using behind me? This is Thinkorswim. Okay, it's offered through Charles Schwab. Jerry, okay, I mean, I'm in Georgia, so I can do that. Hey, not a problem. But seriously, I don't take money from people I don't know. That is commendable. Thanks for showing up every day. M is about to fly. Okay, thanks. Hey, will you be live Monday morning? Of course I will. I'm live every trading day. How many shots of whiskey have you had? Actually, I don't drink. Okay, believe it or not, I very rarely drink. I was never very good at it. So it's like, I admit that some things I'm not good at. Drinking is one of them. Thoughts on HIMX? I can tell you what my thoughts are before I even look at it. It's going to be a no. See? I know. $8. You can honestly tell me that they've increased their dividends for more than 20 consecutive years. They have monthly options. It's automatic no. Let's knock out some of stock research. Yeah, buddy. QYLD, TikTok QYLD is an absolute no. Me also, I do not drink. Well, cool beans. Now, let me tell you why QYLD is a no. Besides the fact that it is a monthly. Okay? What does that mean? Monthly. That means I can only trade options on it 12 times a year. Okay? 12 times a year. It's at 17 right now. Okay, so let's go through some of the numbers for whoever likes QYLD. USB, what happened with that stock? USB, we'll write that down. We'll take a look at it. USB, NKLA. NKLA. All right, better learn something. Brain better thinking. KITT, K-I-T-T. Never heard of them. KITT. All right, so let's finish looking at QYLD. It's a couple of reasons. Reason number one, it's an ETF. Well, what is an ETF? An electronically traded fund. What does that mean? Well, basically, in my opinion, it means I'm too damn freaking lazy to do it. You do it, and you give your money to a freaking machine. Okay, fine. Give your money to a machine. What is the machine doing for you? Well, let's find out. QYLD. Okay, summary for QYLD. This is here is for those you don't know. This is live on YouTube, so you can actually see the screen. You can see all the numbers. We're looking at QYLD. Okay. Now, I'm teaching you, showing you how to get 1% per week. 1% per week over a year is 50% per year. What is QYLD giving those lazy people? Why do I talk about lazy people? Because it's an electronically traded fund. Here, I don't want to take responsibility for my money. You do it. And you give your money to a machine. What is the machine giving you? The machine is giving you 11.78% per year. If that works for you, fine. Dandy. If it works for you, great. What are you doing here then? If you're okay with QYLD giving you 11.78%, fine. Why would you want to take a look at 1% per week? It's only 52% a year. Wagner is 50% per year for me because I spend that money to actually live off of. And I don't compound it, I actually spend it. All right, DG, Dollar General and Estee Lauder. DG and EL. But yeah, Wagner, I get that. All right, so that's one reason why I don't like QYLD. Actually, that's 3 reasons why I don't like QLD. Here's another reason. Okay, this is another reason why I don't like QYLD. All right, QYLD is nothing but an electronically traded fund. What does that mean? Well, it's a fund of different stocks. What's in it? Well, what's in it is Microsoft, Apple, Nvidia, Amazon, Meta, AVGO, Google, Alphabet, Costco, and Tesla. Okay, most of those companies don't even pay dividends. Why would I want to invest my money there and get less than 12%? Well, they get less than 12% because QYLD only has monthly options. So let's see what I get on a weekly basis if I like QYLD. Okay, 1784, I'm going to do the 18s. The 18s is giving me, oh, what is that price right there? 0? Okay, so let's go to the 17s. The 17s are giving me 50 cents. I'm losing 84 cents right off the top. 1784. If I sell the 17s, I'm losing money. If I sell the 18s, I'm getting nothing. The options are worthless on this. And it's 4 weeks away. I got to carry it for 4 weeks, which means, okay, she goes up, she goes down, she goes up, she goes down, she goes up. Okay, great. Where's she going to be in 4 weeks? Well, how the hell am I supposed to? That's 4 weeks away. I own QYLD for 2 years, and I agree with this guy. Well, thank you, Isaac. If you can, think about it. If you can get a safe, predictable, consistent 1% per week, doing it yourself. Let's take a look at Microsoft. Why? Why are we looking at Microsoft? Well, Microsoft is right here. QYLD has Microsoft as the biggest position in QYLD. What's the second biggest position? Apple. Both of them have nice options on them. Well, let's take a look. Let's take a look at Microsoft first. MSFT. Okay, Microsoft. I wouldn't buy it because it's at 450. I don't buy stocks over 250. Too far of a drop for me. Then I bought them individually. Kept killing it better than ever. Isaac, I agree with you 100%. Why would you give your money to a computer? The computer's giving you less than 12%. That's 1% per week. I'm showing you 1%. But let's take a look at Microsoft. Okay, look. You buy it at 450. The 450 is going for $4, just a little bit under 1%. Great. So what exactly is it? Okay, let's clear this. It's bringing in $4. And what is the price? The price is $450. What does that come to? That comes to 0.88%. Okay, 0.88%. Hold on. Multiply that times 52 weeks, because it's 52 weeks in the year. That's 46% per year. I bought NASDAQ 100 10 years ago, didn't do a thing, up 400%. Okay, Mugmaster, let me ask you a question. In that 10-year period, how much money did you take out of that particular account on a weekly basis or a monthly basis? You're up 400%. Great, fine, dandy. Okay, so if I take 10 grand and throw it into something, do you think I'm going to wait 10 years to get a return? Oh, hell no. In 10 years, that's absolutely a horrible return, in my humble opinion. Let me see if this is up and running. Hold on a second. This is going to be for you, Mugman, or what was his name? Mugmaster. All right. This is my new website. I haven't even looked at it yet because I can't figure the damn thing out. All right. All right, Mugman, you right? Mugmaster, you ready for this? Weekly compound interest calculator. Did they fuck with my calculator? Holy shit. Weekly time frame. 10 years. Compute savings. Oh, okay, cool. All right, so let's go back up here for a second. All right, so Mugmaster, just for the fun of it, you got 400%. 400% in 10 years, right? All right, so let's take 10,000 bucks. We're going to invest. I'm going to show you my compound interest calculator. Okay. Now, we're looking at 1% on a weekly basis. Okay, for a 10-year period. Okay, so my investment is $10,000. Okay, see that right there, $10,000? What do I have at the end of 10 years? Well, I have $1,766,502. Is that 400% or is that more than 400%? Well, let's do some math to figure it out. We got $10,000, okay? And we're going to divide it by the profit. What is the profit? Well, the profit's right here, $1,756,000. Okay, 1,756,502. Okay, that comes to a grand total of, well, that ain't right. Or is that right? That's like 500% return. Okay, I can deal with that. All right, anyway, it's safe if you play. Wait a minute. It's a safe play if you don't know what you are doing at the moment. Yeah, a lot of people don't know what they're doing at the moment. Let me go back to where I was. All right, Gallant. Take a look at Siri. The numbers are crazy. All right, Mug, you did 0. Well, I live off my interest. Okay, so I have X amount of dollars. I put it aside. Okay, every week I write a covered call against all of my positions. I bring in 1% per week. So let's say hypothetically I have $100,000. What is 1% of $100,000? Well, that's $1,000 a week. I live off of that money. Okay? Now, you took out 0 and it grew 400% in 10 years. Well, alrighty. I make 50% per year. So how quickly would I get to 400%? What is that? 2 years, 8 years. Wait a minute, 4 years. 8 years? I don't know. Whatever. Irrelevant. So where was I? I forget where I even was. All right, Gallant, you want to look at Siri? Let's look at Siri. All right, interesting. First thing, Mike, first thing I want to take a look at is what am I buying for? $289. Okay, Siri's, well, it's a cheap stock. It's on Warren Buffett's list. If it's good enough for Warren, it's good enough for me. I can buy it $289. The 250s are going for 43. That's big. The 3s are going for 14. Now, I know it doesn't sound like a lot. It doesn't. But let's do the math on them. All right, drone pilot. Ooh, 2 people? Okay. Okay, Mugmaster, 400% safe play for 10 years. Okay, that means if I take my money and put it into whatever, 10 years, I'll get 400% return. But what am I going to live on in the meantime? Okay, so you're telling me I should get a job just so that I can do a trade like that? No thanks. I have no problem whatsoever getting 1% per week and living off my interest. Okay, I don't know who came up with 500% per year. Drink the Kool-Aid. Mugmaster, this guy is easily making 1% per week. Big cars, thank you. With this strategy, Isaac, 5 years, probably. It's not 8. All right. Mugmaster, do you know what it is? I haven't worked in 20 years. Okay. Okay, you're right. Yep. I really want to understand what you're doing, the real deal. All right, Brand, the real deal. Okay, let's do this one here. Okay, it's actually okay for others to have a different play. You're absolutely right. I'm going to agree with you. What dividend stocks should I buy this month? All right, films and clips. I don't give recommendations. I just show you what I'm doing. Whether or not you choose to do the same thing I do, that's totally your responsibility. I tell people make sure you do your own research. Is your shares get called away for covered call? Do you sell puts in the same stock? No, I don't. I don't do puts at all. Let's take a look at Siri. Okay, Siri is not on my list. Siri, S-I-R-I, is on Warren Buffett's list. That's why we're looking at it. Because if it's good enough for Warren Buffett, hypothetically, it should be good enough for us. Okay? Hypothetically. Do I speak Chinese? Why do I need to speak Chinese? That's a silly question. All right, so if I can buy it first thing Monday morning at $2.89, great. Now, $2.89, I can sell the rights for someone to buy it from me at $2.50. Okay, which means I'll be losing 30 cents right off the top, which means I'm only bringing in 13, but 13% is still 3%. Because it's, okay, alrighty, whatever. All right, so if I buy it at $2.89, the closest strike price is going to be the $3 strike price. The $3 strike price is going for 14 cents a share. So what does 14 cents a share equal? Clear. 14 cents a share divided by the purchase price of $2.89 comes to a grand total of 4.8% per week. Hey, Solero, how you doing? Do you see the numbers right there? The purchase price for Siri, first thing Monday, is $2.89. The $3 strike price is 14 cents per share. 14 cents per share on a $2.89 stock is 4.8% return. I'm going to write that down and actually do that one on Monday. What's a dividend? A dividend is your percentage of the profits. When a company is profitable, they share the profits in what they call a dividend. Cardiology guy, I haven't seen you in a while, dude. Nice to see you back here. What stock we're talking about? Siri. Good evening, everyone. Hey, fascinating football videos. Nice to see you again. Siri, S-I-R-I. It is on Warren Buffett's list. That's why we're looking at it. Okay? Picaris, no way Siri has increased dividends in 20 years. Okay, Picaris, you're absolutely 100% correct. But the reason why we're looking at it, DG is another good one. We'll take a look at it in a second. Okay, Picaris, there's the reason why we're looking at Siri. The only reason we're looking at Siri is because it's on Warren Buffett's list. Now, if it's good enough for Warren Buffett, maybe we should take a look at it. That's the only reason why we're looking at it. It's a Buffett list stock. Yes, it is. Okay, so let's take a look at Dollar General. DG. 128.77. 128.77 was the last trade. I can buy it at 129.20. The 129s are going for 180. That's over. 130. That's over. Okay. I like the 128s. I like safe trades. I like to be in, like to be out. It's a heavy bottom $2, $3 stock. Very interesting. Yep, it is absolutely 100%. Blah, blah, blah. Okay, so hypothetically speak, if it's good enough for Warren Buffett, it's good enough for me. You guys are responsible to make your own decisions. All right? So either you like it or you don't. It's totally irrelevant to me. I look at the numbers. I'm strictly a numbers guy. Okay, first thing I want to see is what can I buy it for? What can I sell the rights for? Is that more than 1%? Well, in this instance, it is. Okay, fine. Now, what I want to know is what is the chart telling me? 5 things I want to look at. The high, the low, where was it a year ago? Where is it today? And what direction is it going? Great. I like the 1-year chart. Let's take a look at the 90-day. Okay, the 90-day chart, exact same thing. The high, the low, where was it? Where is it? What direction is it going? Wonderful. Siri is doing a split 10-to-1. I have no idea. Sorry, Hava. I have no idea. So, I like the way it's looking. It's at the high here and the low here. Now it's bouncing up. Okay, what do you mean by sell the rights of a stock? Okay, NJ4 Life 79. 102 cost 100 shares, make you $48 for 1 week. I have no idea which one you're talking about, Damood. Okay, at the moment we're talking about Dollar General. Dollar General is at $129 a share. I'm gonna go back a little bit because you guys. Series, nope. Damood. I have no idea what you're talking about. 102, 102.5 costs 100 shares, makes $48 for 1 week. Yeah, but what's the rate of return? Okay, what do you mean by selling the right to a stock? Okay, now, NJ for life. Miss Joy, how are you doing? Okay, so NJ for life, is that right? NJ, New Jersey for life? Okay. What do I mean by selling the rights? Okay, an option is a right, not an obligation. Specifically, a call option. When it comes to stock options, you have call options and you have put options. Okay, call option, it gives you a right, not an obligation. That means I can sell somebody the right. So if I buy it at 129.20, okay, I can sell you the rights to buy it from me at 129, 128, 127. Now I do weekly options. Okay, 28 June, that's this Friday. 5 July, that's next Friday. 12 July, that's 3 Fridays away. 19 July, that's 4 Fridays away. Every Friday. If I sell it on Monday, it expires on Friday, which means whoever buys it from me has to do whatever they want to do before it expires on Friday afternoon. So if the stock right now at 129.20 shoots up to 150, 170, 180, whoever bought that option from me still has the right to buy it from me at 129. Okay, so I'm selling my rights. 129.20, I sell the 129. I collect $1.83. That is more than 1%. This is what I want. I don't care about the stock price. I don't care if the stock goes up and shoots way up. I honestly don't care. My main concern, does the company consistently increase their dividends? That's my main concern. If so, what can I buy it for? What can I sell my rights for? And then where is it going? Now, we're still looking at the 90-day chart. 90 days ago, she's almost at 165. A week ago, she's almost at 120. Okay, you've heard it over and over again. You're going to make money in the stock market, you buy low, you sell high. You can't get any lower than the low of the 90-day period or the 30-day period, whatever time frame you're looking at. There can only be one high and there can only be one low. Okay, the high is here, the low is here. All right, so where's it going next? Okay, usually, let's look at the last 30 days. Okay, here's the last 30 days. I want to look at the exact same thing. High 30 days ago, low last week. Okay, she goes down, she goes up, she goes down, she goes up, she goes down, she goes up. Look where she is now. She's at 128. Where's the bottom? Well, the bottom's at 122. Where's the top? 148. That's a long way to go up, right? Now, that's usually, let's take a look at seasonality. Now, some of you might say, well, what the hell is seasonality? That's a good question. Now, seasonality is how does the stock normally react during the year? Well, this is January 1st to December 31st. Okay, the blue line represents the movements so far this year. Okay, the blue line is this year. The red line is 10 years worth of data. That's 2014, 2015, 2016, 2017, so on and so forth. 10 years gives us an idea of what it normally does. We're here right now. And you can plainly see that usually this time of year, she goes up. Okay, so if historically the stock continues to go up, well, we just click on this right here, drag it that way. Okay, it's pretty plain to see. Let me bring this up here. Okay, this is where we are right now, this line here. She tends to go to the upside for the next few weeks. Okay, that works for me. So what am I looking for exactly? Okay, I want to change this. What I'm looking for exactly is to buy it first thing Monday morning, 129.20. Sell somebody the rights at 129, which means they can buy it from me anytime between Monday when I sell it to them, okay, when they buy it from me on Monday morning and Friday afternoon. Where does the stock need to be? The stock needs to be at 129 or higher, or 129 or lower, and then we'll figure that out on Friday. Me, I personally really don't care. What I care about, do they consistently increase their dividends? Okay, great. They do. Fine. What does the chart tell me? Well, the chart's telling me she's bouncing off the bottom because you can't get any lower than the 30-day bottom. There's only one 30-day high. Here it is. One 30-day low. Here it is. Okay, she goes down, then she goes back up again. That's all stocks do. Let's take a gander at what it looks like for the whole year to give you an idea. Okay, so let's take a look. Look, January, she went down, then she went up, then she came down, then she went up, then she came down, then she went up, she came down, then she went up, she came down, then she went up, she came down, up, down, up, down, up, down, up, down, up, down, up, down, so on and so forth. That's all they do. They don't come to your house, they don't wash your car, they don't wash your dishes, they don't take the dog for a walk, they don't do nothing but go up and go down. So when's the best time to buy it? Best time to buy it is at a low. Well, where is it right now? Right now, it's at a 30-day bottom, right there. And you got 1, 2, 3, 4, 5 days to the upside. How much more up do they have? Well, look at all the space they got before it challenges the 30-day high again. Okay, is that guaranteed? No, it's not guaranteed. But what does it normally do this time of year? For that, we use the seasonality. Seasonality is taking one chart and put it right on top of another. Okay, 2014, 15, 16, 17, and say, what does this stock normally do this time of year? It's Dollar General. They don't invent new stuff. All they do is sell stuff. They just sell other people's products. All right. So I like Dollar General. As a matter of fact, I'm going to write it down and circle it for next week. Wow, we get about a dozen to look at for next week already. All right, Miss Joy, hello. How do you trade? I'm a beginner. Films and clips. Oh, wow. Films and clips. Best thing to do for you, in my humble opinion, is find a mentor. Okay, usually you could look for someone in the family, like an aunt, uncle, father, grandfather, whatever. Other than that, you go to your banker, say, hey, Mr. Banker, here's my money here. I want to start investing in the stock market. It's very simple. First of all, you have to open up a trading account with one of the trading brokers. Okay, there's a lot of them out there. Find something you're good at. Probably the best thing to do if you're really a beginner, go onto YouTube and look for interesting things to make sure you understand it. Understand what is a stock. A stock is nothing more than a piece of paper showing that you own a portion of a certain company. All right. So, hypothetically speaking, Dollar General, you know who Dollar General is. Well, I'm assuming you know who Dollar General is. Okay, you can, for $129.20, own one share of Dollar General. Okay, the more shares you own, the more profits you get. Now, when the company is profitable, they share their profits with the investors. Once you start buying some of the shares, you own a portion of the company. Okay, so Dollar General pays out a dividend, which is a portion of the profits. Now, I don't look at companies unless they're profitable continuously for 20 years or more. Okay, that's just my rule. You guys can make up your own rules. You can invest your money however you best see fit for yourselves. Now, what I'm teaching you here is the trading strategy I taught my 9-year-old daughter. She wanted to learn how to trade. It was simple. It had to be simple. It had to be safe, predictable, consistent, and no way she could lose. That's the 5 criteria I had to come up with. So the 5 rules, simple. Never buy something you don't want to own. I got no problem buying Dollar General. I like Dollar General. They're in almost every major city. Never buy something you don't want to own. Never sell at a loss. If I'm buying it at $129.20, I'm not going to sell it for less. However, if I buy it at $120 and I sell the $129s and somebody buys it for me from $129, am I losing? No, because that person is paying me $1.83 per share to buy, for the privilege of buying it from me at $129. Buy next Friday. So if the stock goes up, he's going to buy it from $129. Do I care? No, because I've already collected the $183, and that $183 is over 1%. So I want 1% per week. The way to get 1% per week is make sure you get a good company, okay, good company, okay, make sure they're increasing their dividends, okay, Make sure they have weekly options, because if I don't hit my target this week, I'll collect the 183 this week. And if I don't hit the target of 129, I'll do it again next week. Okay, what's next week's going for? Okay, the 129 next week is going for 247. Now, these numbers are going to change. They change every day. All right, every day the numbers change. Stocks go up, stocks go down. What am I looking to collect? I'm looking to collect the Vega. Now, I bet you have no idea what that is. The Vega is the portion of the option, which is time value. So from Monday to Friday, all right, Monday has more value, has 5 days of value. Tuesday has 4 days of value. Wednesday has 3 days of value. Thursday, 2 days of value. Friday, 1 day of value. And then Friday afternoon, they expire. So I'm looking to collect the Vega. I really honestly don't care about the stock price. I don't really care about the dividend. I just use the dividend as to tell me, as a sign to tell me when to buy. Okay? Heinz Ketchup, Halliburton, Nordstrom's, MPW, Occidental Petroleum, Comcast, American Express. Okay, most of these companies you've heard of. So hopefully that helps you out a little bit. Oh, I missed some more questions. Let me pay you to log in to this. I have no idea what he's saying. Siri, all right. Yes, it is going to split. I didn't know Siri was going to split. He must be talking about outs. I have no idea what that means, talking about outs. Expo Jesse, are you trading on demand? I have no idea what that means. Okay, I jump in first thing Monday morning. Okay, I'm on at 9 a.m. The stock market opens at 9:30. Okay, I put my orders in at 9:30, between 9:30 and 9:45. I'm usually done about 9:45. Okay, and then I do whatever I want for the rest of the week. I come back and take a look at it on Monday and on Tuesday. Okay, what's it doing? I look at it on Wednesday. What's it doing? And then Thursday, same thing. Friday, I'm on at 3 o'clock. I don't do the Friday mornings. No point. The option expires Friday afternoon. So I jump in at 3 o'clock Friday afternoon. I want to find out what my positions are at. But I have no idea what you mean by trading on demand. No, I don't do puts at all. Yes, okay. He's talking about calls, not puts. Thanks, Pakaris. All right, he found a put sell now 4.7%. Sounds like a mid-cap, high-risk put. Okay, I don't do puts at all. Don't know what you don't grasp about that one. Oh, okay, thank you. Definitely explained. Great. Well, I'm glad you like that one. Let me pay you to log in for this. Okay, whatever. So they buy the rights and pay you a premium. They can choose to take the stock if the price goes up. Pakaris, exactly. That is exactly it. Lots of room. You're absolutely right. There's lots of room in that space. Major, how are you? Okay, with the math being 30% chance to get a call gets exercised, it seems that often, personally, I'm not quite sure what you mean by that. I don't. Okay, your girl, hello, I'm still here. Thank you, you're welcome. Guest, blah, 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 your girl. Don't have to say numbers, obviously, just curious what company. That was Siri we looked at. And then Dollar, we looked at Siri first, and then Dollar General. I like both of them. Both the numbers looked good. Danny, can I invest my 401k and IRA that I have through my job into something other than Vanguard? That is a question you have to ask the company in which you work. Some of those people are very fickle about where you put their money, where you put your money. Okay? Now, I always tell people, unless you're getting a dollar-for-dollar match on your 401k, I would definitely say, yeah, thanks, but no thanks, I'll do it myself. Okay, but you cannot beat a 100% return. Okay, so if you're investing in your 401k, you put in $1 and then your employer matches it dollar for dollar, yeah, that's 100% return. Yeah, you take full advantage of that first before you do something like this. But always be leery of the fine print in the 401k, because you could lose all your money in your 401k if you don't know exactly what's going on in it. And to answer the question, you can do covered calls in a 401k. There's certain trading strategies you cannot do in a 401k, but that is something you really need to ask your tax strategist or your tax planner or your representative at work. Okay, I really can't answer those questions for you because I don't know if I told you this. I have, whoops, I missed something. What am I missing? What am I missing? What am I missing? Okay, yep. Wow, Nike looks great too. All right, Gallant, we'll take a look at Nike. NKE. All right. No, I like Nike. I do. I especially like the way he has his corporation set up where he has to pay taxes. I like that. That's freaking sick. Okay, NKE. Now, we all know who Nike is. Okay, first thing I always want to look at, what can I buy it for? 97.45. What's the closest strike price? It's going to be 98. The 98 is going for 330. Are you kidding me? That's freaking awesome. That's over 3%. All right, well, let's take a look at the chart then. High, low, where was it? Where is it? Where is it going? Well, that's the 5 things I want to see. Now I want to take a deeper look. A year ago, Nike's at 111. Okay, she bottomed out. Look at this. She's got a quadruple bottom. Ooh, nice. Okay, back in September and 3 times in April. Okay, right around the 88.50 area. She topped out the end of December with a triple top. You see that? A triple top right there. End of December. Triple top. And that was 123.47. Okay, last 90 days. Okay, 3 months ago. Here we are, right here. Check it out. 94, down to 89. 4 bottom. Up, down, up, down, up, down, up. Yeah, sorry, Gallant. It looks like a no. Why does it look like a no? Well, here we go. Last 30 days. Okay, last 30 days. Okay, here's your high. She drops back down. She shoots back up. Look how close she is. 97.18 to 98. Yeah, that's a little bit too rich for my blood, even though they're paying 3%. Ask yourself a question. Okay, 97.45. Do I like Nike at 97.45? What if I have to hold it for a long period of time? Is this 3% going to be worth it for me to hold it for longer than I might normally hold on to that? Doc, the last price is higher than the ask. All right, hold on, Doc. I didn't even look at that. Oh, yeah. Nice point in there, Doc. Nice catch. Okay, what Doc said is every once in a while, the market maker, for those who don't know who the market maker is, he's the store owner. Okay, you go to your corner store, buy a gallon of milk. Well, the guy who owns the store buys it at $3, sells it to you at $4. What he makes is called the spread. Okay, so the market maker will do the spread. Here's the spread: 286, 289. What's the difference? 3 cents. Doesn't mean anything to you and me, but when you buy and sell millions upon millions of shares, yeah, it adds up quick. But here's what Doc just pointed out. The last traded price, $2.93 a share. On Friday afternoon, that was the last trade of the day, or last trade of the week. Okay, 293. The bid, if I want to sell it, 286. That's lower. The ask, 289. That's lower. That's the market maker tipping his hand saying, well, I'm going to open up lower on Monday. So you ask yourself the question, at 293, sell the threes and you're making, what, almost 4%? I'd roll the dice on that one. Siri at 4% for the week. I could sit on it for a couple of weeks for it to come back, but when are they paying their dividend and how much is the dividend? Okay, April, May. Yeah, they're not going to be paying a dividend for quite a while. The last dividend they paid was 2.5 cents, and that was the 9th of May. That was last month. So we won't see it again for another 8 weeks, maybe. The last price on Sirius higher than the bid and the ask. Does that matter? Well, yeah, the market maker's gonna drop it. Talent, NYCB. Okay, so NYCB, we played with that one a little earlier this year. NYCB. I made money on that one in one account, lost money in another account. It's at 306. We were playing with it back in, for quite a while, but now it's at 3. Okay, 307. The 3 is going for 10 cents. Lose 7. Yeah, you're only making 1%, but look where it is. Do you really want to play with that? Seriously, think about it. A 10-to-1 reverse split? Yeah, no, thank you. I want to stay away from that one. But take a look at the numbers. Seriously, take a look. Okay, 30 days ago, then she drops, back up, drops again. Here we are. It should go hypothetically to the upside. But if I buy it at 307 and I sell it at 3, I'm losing 7 cents right on the top. So that means I'm only making 3 cents. 3 cents on a $3 stock. Yeah, it's 1%. But look what she's been doing. You know, I don't like it. Me, personally. All right, so next on our list. What's your suggestion on NYCB? That was my suggestion. Okay, let's take a gander at it. Okay, now, a year ago, we're at 10. Beginning of August, we're at 14. By the end of the year, she's at 10. In January, she drops from 10 and picks up around 6. That's almost a 50% drop. And it just keeps on dropping. The bottom of the year is right there at $1.50. Shoots back up, and she's been going channeling for the last few months. Check it out, the last 90 days. Okay, here's the last 90 days. 90 days ago, we're at 320. She drops all the way down to 265. Shoots up to 4. Drops all the way back down. Hits a 30-day bottom right there at 3. Let's look at that a little tighter. Okay, 30 days ago, we're here at 375. We got our bottom right at 298. Now she should hypothetically be going to the upside. Hypothetically. Okay, what does this normally do? And you can't really go normally on this one because this one just got taken over. Okay, but normally this bank just goes a smidge to the upside. Take a look over the last 10 years. But she's under new management. Okay, a management, it just kind of like imploded, and then someone just waltzed on in and say, hey, let me buy it, take it over. Okay, that's where you might want to take a look at who actually did that and find out how good are they at running a bank. Puts get auto-corrected to outs. I have no idea what that means. I don't like puts. Okay, talent. I don't make suggestions. I don't make recommendations. I just show you what the numbers and I give you my opinion. My opinion doesn't mean diddly squat. I didn't go to school for it. Okay, I don't have no degrees. All right, I have no certificates. I have basically nothing. The only license I have is a driver's license to drive a car. That's it, and a motorcycle. So I can drive a car and a motorcycle. I can't tell you anything, but I can read you the numbers, and I can tell you what the numbers look like, and I can show you what I do. Okay, now I've been averaging over 1% a week for the past 15 years, but that's just me. Puts are, okay, well, I'm not going to say that one. What is my suggestion? Like I said, talent, I'm not going to suggest anything because I have no idea who you are. I have no idea what your risk factors are. I have no idea what your goals are. I have no idea what it is you want to do. If you like NYCB, do a little research on them and see if you're okay. Remember rule number 1, never buy something you're not okay with holding long term. If you're okay with buying it at 307, well, that's up to you. Okay, you can buy it at 307, sell some of the rights at the 3, get your 10 cents per share, make you 1%, hold on to it, do it again week after week, keep selling that 3, keep bringing in that premium every week, week after week after week. But ask yourself that one question: do I like NYCB at $3.07? Okay, Danny, it's 100% yes match. Okay, yeah, so if you have a 100% match in your 401k, then you just continue to invest the max on it. All right, hold on a second. I missed a bunch of questions. Uh-oh. All right. All right, Danny. That was so helpful. Okay, so Danny, here's the thing with a 401k at work. Okay, number one, if you take a look at the super rich people, what they do, if you have a maximum match on your 401k, which means, let's say hypothetically, they allow you to deposit 4% of your paycheck. Let's say it's $1,000 a year. So you deposit $1,000 a year. You match the 50-50. That's a 100% increase right there, regardless of what kind of crap they put it in. Because more than likely they're going to put it into crap. But ask them, okay, hey, you're matching me, great. Where are you putting my money? You're putting it into Vanguard? Try to find the best Vanguard piece of crap that they have. And why am I saying that? Because Vanguard doesn't give anything over 20%. Okay? Now ask them, can I self-direct? And if you can self-direct, ask them what your limitations are. Because there's a lot of unanswered questions, especially when you get somebody else in control of your money. So basically, you're putting a certain amount of money in, they're matching it a certain amount. You get your 100% right there off the bat. Okay? But then anything over that, you don't want to put it into your 401k. You want to put it someplace else. Because it depends on what your 401k is paying on average. Okay, at some point you'd like to self-direct it. Okay, great. What are my options on my self-directing? Where can I put it? And what are they giving you? So there's a lot of unanswered questions there, Danny. But I'm glad you like that. All right, Damon, Nike's a no. Yeah, Nike was a no. I saw that one. It's too high. Yeah, New Jersey for life. Yep, I got that. Even with seasonality, yeah. Well, okay, Gallant. Remember, we talked about this once before. Even though seasonality has to go to the upside, it doesn't trump the, sorry for the use of words for those who get offended easily, it doesn't trump the trend, okay? The trend trumps all, because the trend is your friend right up to the end. Because, see, this is trending down, okay? And it's continued to trend down, even if the seasonality says, well, it usually goes up this time of year. Well, it's going to continue the trend until we, the buyers and sellers, say, oh, wait a minute, $3.06 for this company, that's dirt cheap, I'm going to buy it. And then enough of us say, I'm going to buy it, and then it slowly goes back up again. Okay, Mark, I bought Fingerhut around 6 years ago. I forgot I had some stock in Fingerhut. It went private. Uh-oh. If it goes private, usually they buy you out. Okay, Shiba Lucid. I bought 3 billion Shiba. Okay, good for you. Now I'm not sure if I should buy, sell, hold. I can't give you any answer anything on Shiba Inu because it's a cryptocurrency. You cannot take cryptocurrency, go to Starbucks and buy a cup of coffee. We're just not there yet. So until I can pay my phone bill with my cryptocurrency, or if I can pay my grocery bill with my cryptocurrency, I want nothing to do with it until I can have something to do with it. I mean, yeah, I can pay someone in England for doing something, or I can pay someone in Taiwan to do something for me, but can I use it here in the United States? Because I live here in the United States. Why would I want to use a currency that I can't use here? So I don't do any crypto whatsoever until it becomes legal tender. And it's not yet. So, sorry, can't help you out. Your residents, tap the screen, folks, and show some love. Help the algorithms. Cool beans. Thanks, your resident. Thanks, your residents. All right, so, Picaris. I'm a Centerpoint Securities right now. Is 0.2 per option contract bad for commissions? Picaris, the commissions are going to be called cost of doing business. There's no way to get around it. All right. Now, I use Robinhood on some of my accounts, and I have Thinkorswim on other accounts. My Thinkorswim does rather well. They charge me a nice commission, but, I came from a time, and I'm not sure if you realize this, but when I first started trading, okay, it was $125 in, $125 out. And then it was a per contract. Okay, so if it was one contract, it was one price. If it was 100 contract, it was one price times 100. It was crazy when I first started trading 20 years ago. It's so much nicer nowadays. But I just write it off as a cost of doing business. And you can use that cost of doing business to write off on your taxes if you haven't talked to your tax strategist yet. And I never heard of center point anyway. Damoon, we already looked at Siri. Do you need to buy 100 shares and 2 calls? Okay, Tiny. In order to do any option trading, you need to have 100 shares of something. So 100 shares of, let's say, NYCB. All right, you need 100 shares to sell one option contract. Instagram, James, when you look at the derivatives market to try to predict the direction, what do you specifically look at? Open interest, put call ratios, etc. You do realize that has nothing to do with what we're talking about here, okay? Remember what I said. Your residents, you've been here long enough. You know it has to be simple. It has to be safe, predictable, consistent, and no way to lose. It was created for my 9-year-old daughter. You want me to talk about derivatives with my 9-year-old daughter? Well, she's 20. She's going to be 25 in a couple of weeks. So, yeah, that was quite a while ago. So, no, I don't do that here. I make it as simple as possible. Now, you can, at some point, after you learn the basics. So I tell people, you want to learn the basics? Fine, great. This is simple, this is safe, this is predictable. This will get you up to 50% per year if you do it right. Okay? Now, if you want to add more things to it or take away things to get a little bit more money, fine, great. But I have been teaching this exact same strategy this way for almost 15 years, and I don't want to change it because I want to make sure everyone who comes through my doorway, there's a lot of people going through my doorway, everybody comes through, learns the exact same thing year after year after year. Okay, so it's the exact same. New shoe shopping coming up for the start of school. All right, Richard, I have no idea what that means. Okay? But, Richard, if you want a little tidbit, growing up in the 70s, if I wanted a new pair of shoes, I had to go out and get a job and earn the money to buy the new pair of shoes. Or I got whatever my mom got me. And that was whatever the best dollar could be. Okay? Is this stock or option? Okay, what's that? OIPAI? O-I-P-A-I. OIPAI? I don't know. This is stocks and options. Okay, we're invested in dividend stocks and we're selling covered calls against them, which is options. A covered call strategy is one of the safest strategies there is. That's why I teach it here to you guys. Carprick. Nike is a sponsor of the Olympics, if that makes a difference. You know what? I haven't watched the Olympics ever since what's his name did that. What's his name and what's her name and whatever. Yeah. Sorry. I like the Olympics when it was all amateur athletes. Okay? Because that's what the prerequisite was. You had to be an amateur athlete. Then you have all these countries saying, all right, we're going to sponsor our people and we're going to train our people. Yeah, they're no longer amateurs. They're professional. They don't do anything. They're not like a drywaller and in their spare time they do whatever. No. They do their sport and that's all they do for their whole life. It's not like it used to be in the old days, so it's too commercialized for me. So I don't do the sport. I don't do the Olympics anymore. Okay? So, more questions. Chewy, nope. Chewy hasn't, you're a newbie. Carlos, there's nothing wrong with being new. Okay, so if you like Chewy, here it comes. If you like Chewy, great. You do it. My opinion is no. They have not been in business for 20 consecutive years and consistently increased their dividends. Okay, so if I'm investing my hard-earned money, I want to invest it with someone who has a proven track record. Okay, the companies I look at are anywhere between 50 to 100 years old. They're old, they're slow, they're boring as hell. Gallant, you think Mendelez looks good? Let's take a gander. MDLZ 6650. 81. Check it down. 66.51. The 66 going for 80. Oh, come on. We already looked at this. We're paying 120. Yeah, everything looks fine. Okay. Even the direction it's going. So we already did this one. Or is it 30 days? Okay, remember, we took a look at this already. 30 days ago, she's at $70.50. She drops down, shoots back up, drops back down again. 1, 2, 3 days to the upside. That's like a red carpet. Come on down. Okay, this one's a good one. Getting you over 1%. What does it normally do this time of year? This time of year. Okay, basically kind of flat. Going to dip a little bit, but then come back and just continue flat. But Galant, you're right. It looks excellent. And I think it is written down for next week. Well, it is now. MDLZ. All right. You're right. It is looking good. Next on the list, Al. You're way behind in the comments. You were confused 15 minutes ago what he meant by outs. Yes, I was. I had no idea. I missed Siri 30-day chart. SOD. It looked okay even though it was 30-day high. Okay. The 30-day chart for Siri, SIRI. Okay, Siri go to the upside for the next couple of weeks. Great. Standard. Okay, last 30 days for Siri. Okay. Yeah, Siri's are going to be a no. Sorry. Siri's going to be a no. Why? Take a look. 30 days ago, we're here. Drops, pulls back. Drops, pulls back. Look where we are now. Okay? Siri's a little too high at the moment. Any resources to look into? Brand? Books, a video? Yeah, I've written 14 books. Okay, they should be available on Amazon. I have the new updated versions that should be available as soon as my website is up and running properly. And then I will be doing audio books for all the books eventually. I got way too much on my plate. All right. Wow, I'm caught up. Yeah. Uh-oh, I missed that one. All right. What are we looking at? Which one is that? Oh, ComEd. Oh, wow, I missed all these questions. Felix, how are you? Ooh, I missed a lot of questions. Uh-oh. James, what are your thoughts on the new DeFi stuff? I have no idea what DeFi is. All right, wow, I missed a lot of questions. All right, sorry guys, I'm taking a look at the questions that I missed. Sorry, books and videos. Yeah, Brand, we do have some of those. Just give me a few more weeks to figure out the website. It's not my thing. I have to pay someone to do it for me. Go on YouTube, watch videos called Covered Call. Yep, that works. Send tacos. Hey, buddy, you're back again. He was here last week. Hey, Al, when you get 50 years old, you can do makeup contributions. Okay, self-direct. Yep. How about if you're 21? Yeah, no, sorry, you got a long way to go. I'm thinking NYCP puts. Okay, Mo, good for you. I don't do puts, Mo. Okay, New Jersey for life. What indicator do you use? I use, all right, good for you. I don't use any of those. My indicators, Jersey for life, my indicator. You ready? 20 years of increased dividends, weekly options, and the calendar. That's it. That's my 3 criteria. Has the company increased their dividends for more than 20 years? That means they've been in business for at least 50 years and they are making money consistently. That works for me. Weekly options, I want weekly cash flow. If you don't have weekly cash flow, I want nothing to do with it. Okay, there's over 300 companies that fit that criteria. And then the calendar, well, the calendar tells me when to buy. Okay, hold on, let me just pull this up. Okay, the calendar tells me, look, ExxonMobil is paying a dividend on the 14th. Well, great. Well, I want to buy 2 weeks before. But if you want to get really technical, what's today's date? May, June. We're into June 22nd. All right. So here's June 22nd. Okay, Saturday. What has the dividend in 2 weeks? Okay. Cardinal Health, Comcast, American Express, Cisco, General Dynamics, JP Morgan. That's the only ones I want to look at during the week. Why? Because I'm only buying 1 or 2 positions. Okay? When I'm buying 1 or 2 positions, I'm looking at 7 stocks. I'm only picking up 2. Okay, so which one of those is going to be best for me? That's all. I don't want to look at anything else. There's 9,552 companies every single day that I can choose from. Okay, next week, I only want to look at these 7. That is it. Okay, when I say 10-minute trader, I mean 10 minutes. It shouldn't take, you know what? For the fun of it. Just for the fun of it. Let's look at these 7 stocks and find out which one works. Now, I'm not going to say anything. You just watch what I do. Okay, and I'll show you how quick this actually should be. Are you ready? Okay. Got to get all psyched up and ready to go. First one. Remember, I don't care about anything else. Just these 7 right here. Like 6. Just the 6. See how long it takes me to do these 6. Okay, first thing I want to do. Cardinal Health, CAH. CAH. Oops, here we go. First thing, 106.24. The 106 is going for 65 cents. That's less than 0.5%. No, thank you. Comcast. I love Comcast. CM. CSA. 38.50. 38.50. 47. You know what? I might go for this one because that's over 1%. Great. High, low. Where was it? Where is it? What direction it's going? Ooh, look at that down there. Great. There we go. 90 days. Okay. High, low. Where was it? Where is it? It's bouncing off right there. I like that. The last 30 days. Here we go. Check it out. Down, up, down, up. Yep. I want to jump in that first thing in the morning. Okay. That's Comcast. That's one. American Express. AXP. First thing. 230.89. 230 is going for 3. That's over 1%. Great. Oop, bouncing off that. Great. Where was it? High, low. Where was it? Where is it? Great. Look, look, look. Last 90 days. Okay. Down, up, down, up, down, up. Now it's going to the upside. Last 30 days. Good. Look at it. 30 days ago. High, low, down, up, down. Now she's going up. Great. 1, 2, 3, 4, 5. Yep. Not a problem. 130. So that's 2 so far. Cisco. CSCO. CSCO. Okay. 47.50 to 47.50 is 33. That's a no, less than 1%. It wasn't that quick. General Dynamics. ED, General Dynamics. 298.99 and 300. It's a 0.5%. Nah, no thanks. Last one, JP Morgan. APM. 196.69 to 197. Okay, that's not 1%, but it's close. Where is it? Yeah, adequate. Okay, high, low, all that crap. Last 90 days. Here we are. Okay, high, low. Where was it? Where's it going? Okay, last 30 days. Interesting. Okay, down, up, down, up, down, up, down, up, down. Yeah, no. So, out of those 6 stocks, only 2 of them made for consideration. See how quick it was? It doesn't have to be difficult. Do not make it more complicated than it needs to be. Number 1, find a good company. Okay, so here you go. Got a pen, got a paper? Ready? Here it comes, here it comes, here it comes. Dividend Kings, 54 companies that have increased their dividends for more than 5 decades. That's 50 years. Dividend Aristocrats, 25 years or more increased dividends. There's 64 of those. Dividend Champions, 25 years or more increased dividends every single year. You have 25 years, 150 of those. Dividend contenders, 300 companies, 10 years to 24 years of increased dividends. Warren Buffett's list, right there. I just gave you 5 lists that you can incorporate into your trading. That's over 300 companies. Okay, some of them do intersect. Some of the dividend kings are dividend aristocrats. Okay, now that's over 300 companies. Now you just cross-reference them. Look at each one. Okay, you look at each one. What do you say? Okay. Do I like Best Buy? Do I like AIG? Do I like Albemarle, Coca-Cola, Macy's, Altria, Halliburton, Nordstrom's, Kohl's? That's not Kohl's. That's Kraft, General Motors, Kimberly-Clark, Pepsi, Waste Management, Walmart. Do I like those companies? Oh my goodness, that's not agreeing with me. Ooh, I had enchiladas today. Yes, I shouldn't do spicy food. All right. It takes less than 10 minutes. Seriously, it does. Diane Vars, hello. Over there on. Hey, Henry. How you doing, Henry? Still interested in that 48-volt DC motor? I am. Okay. So, let's go back to our list so we can go over some of these. Let me go over some of these questions I missed. I have Fidelity 401k, and they let you invest in individual stocks. You can call them. Cool. Send tacos. I'm almost. All right. Shamahawa Khan wants to join the live. I have no idea who you are. I insist you send me your phone number. I'll give you a buzz. If you can contribute to the conversation, great. Other than that, I have no idea who you are. Centacos, I'm almost ready but need more experience. Hey, Centacos, I'm here. I've committed myself, all right? So I've been here since January, almost 180 days straight. I only missed 2. I've committed myself to go for the rest of the year. At the end of the year, I will figure out if I want to continue doing this, okay? So take your time. No hurry. This may be for you. This may not be for you. It's not for everyone. It's slow. It's boring. It's repetitive. I look at the exact same stocks every 90 days. Why? Well, because Halliburton, it's a good company. It pays its dividends every 90 days. So I look at it 4 times a year. That's it. 4 times a year. Here's the dividend here. 2 weeks before, I'll take a look. Do the numbers work? Is it the right time to buy? Because it's not just about the numbers. The chart has to be right too. Okay? See, I like to buy low and sell high. But this has already made its low. It went up and it already turned around back to the downside. So that's why JP Morgan is a no at this time. Now, I figure another 5 days or so, or 6 days, that will be at the bottom. And then it'll be time to take a look. So why don't we do this? Why don't we, because I've been doing this for quite a while, how about we put JP Morgan down for 2 weeks? So 2 weeks from today, that gives it plenty of time for the profit taking, because here's your bottom right here. So it goes from 191 to almost 200. Okay, that's a $9 increase. Okay, so people are going to take their profits, and once they're done taking profits, you're going to have you and me saying, wait a second, this is too cheap. I'm going to buy some of these. So we're going to write JP Morgan down for 2 weeks from today, JPM. Okay, so 2 weeks, we'll take a look at JPM. How do I join your other group that is $100? All right, Alvin Pro King Services. There you go. Dividend Stock Talk, Patreon. Okay, so you go look. You look by my name. You look at Dividend Stock Talk, the 10-minute trader on Google, any search engine. You just put it in there. I show up. I've been around for over 20 years. My problem when buying U.S. assets is that I will also be exposed for the volatility and the currency exchange since I am in Sweden. Any suggestions? Yeah, use a VPN. Okay, use a VPN and then do your calculations from there. Because 1%, regardless of what it is 1%. So whether you're using the Swiss franc or whether you're using the US dollar, 1% is 1% on a weekly basis. Oh, so let's get out of there. Okay, Alvin, that's how you do that. But Alvin, if you're serious, give me a buzz. Send me your number. I'll give you a buzz. I'll talk to you. It may not be right for you. Okay, I'm not trying to sell anybody something that's not right for them. Okay, what I want you to take away from because I'm here every night. Okay, just ask yourself, does it make sense? Am I buying? J.P. Morgan's a good company. It is, but what is the chart telling me? Okay, here's your 30-day high. Here's your 30-day bottom. Well, what happens after a 30-day bottom? Well, usually it goes up. Well, it did. It hit here. It went up. And then Friday, they had profit taking already started. So once the profit taking is done, and how long is it going to take? It's going to take about a week or so. Okay, so about a week and a half, maybe 2 weeks from now, it would be a great time to buy J.P. Morgan again. But not today, because I'm not looking. I'm not looking to buy 191 and selling at $300 or $400. I'm not looking to hold on to it for a long time. I just want the 1%. Thank you very much. And what is J.P. Morgan paying at the moment? The 169, 196.69, the 197s are going for 176. But the difference is between them, the 195. Yeah, by the time you get it all figured out, it's about 1%. Great. I like 1%. I like J.P. Morgan. I just don't like it this week. Sorry. Okay? It may be great at 196, but look, there's profit taking there. Okay? And there's going to be profit taking until we're done taking profits. Okay? So let's go up a little bit. What questions am I missing? Send tacos. Ooh, that's a great idea. Thanks, Al. Yeah, I suggest everyone to do a paper trading account. I mean, hell, I've been doing paper trading account for 20 years. Because even I still make mistakes. I've been doing it for a long period of time. I still make mistakes. So yeah, I continuously paper trade, and I come up with new trading strategies I use. This is the only trading strategy I give away for free. Okay? So if this one here makes you 50% per year, what is it that I'm not sharing with you guys? That should be a question you should be thinking. Okay, I got trading strategies that make 100 to 200% per year. Okay? And I don't share those for free, and you have to be a member of my group for at least 6 months before you get the invitation. Sorry. I value my time more than anything else. So yeah, I'm here because I'm creating a legacy, so to speak. My grandson's only 4 years old. Some of you guys may have met him. He comes in every once in a while. He says hi. Okay, he's going to be hopefully inheriting this company another 14, 15 years when he's old enough. So what I'm doing here is creating a foundation for him to live up to. Say, what, Grandpa, what do I do here? Well, check out the videos. They're there. Okay, I'm not hiding anything. It's all right there. This situation, there it is. Okay? Yes, but the exchange rate, then the 1% can disappear. Yep, that's what I mean. Or worst case than that, I lose on FX exchange, has nothing to do with the VPN. Yeah, I know, but all right, here's the thing. All right, just see if you follow this, Hakuna. Right now, let's say hypothetically speaking, you're in Switzerland, right, and you're here trading the U.S. markets. Great. Now, hypothetically, okay, MasterCard and Visa are U.S. companies, and I'm pretty sure you can use MasterCard and Visa. Hey, Bob just showed up. How's it going, Bob? You can use MasterCard and Visa anywhere in the world. Not Switzerland, Sweden. All right. Don't take this the wrong way. All the same to me. Someplace I'll probably never get to. Okay? Across the pond. And, yeah, I'll probably never even get to Switzerland or Sweden. Don't get me wrong. I'd like to. I'd like to start traveling. I just got to find someone to go traveling with me. I don't want to go by myself. Here's an idea. Okay. Now, I don't like cryptocurrency except if you're in a different part of the world, because in a different part of the world, they do accept cryptocurrency. So if you're making 1% a week over here in the US, okay, 50% per year, you can take that and you convert it into cryptocurrency. And then it avoids all that crap. Okay, find a trading, I don't know if you can buy cryptocurrency in Thinkorswim. Hey man, I think you might be able to. Forex, futures, active trader. I don't know. That's one of those things you have to check out. All right, more questions, more questions. Holy cow, we're almost at 11 o'clock. Send tacos. I've been trying so far, but I don't understand options he's talking about. Okay, send taco. What I need you to do, if you're serious, no, only if you're serious, okay? Send me your number. I will give you a call. I like helping out new people because when I was new, there wasn't anyone to help me out. So, you know what I'm going to do? Think of it this way, all right? Now, I'm creating something for my grandson to inherit, right? So, at some point, you're going to say, I remember the guy that helped me out, that James Gardino guy with 10-Minute Trader. He taught me this, he taught me that. Because we all remember our mentors, okay? I remember Bob Proctor. I used to listen to him. I remember Wade Cook. I read his book. I remember Tony Robbins. He got his information too. Okay? I want to invade your space. I want to give me a call. I'll walk you through it. And then forever, for the rest of your life, you're going to remember me. What do you think of that? No, seriously. If you want me to help you out, okay, send me a number. I'll give you a call. A good-looking man like you can't find a woman easy to travel with. No, I can't. You should travel the world. Life is short. Yeah, I do want to travel the world. Okay. All right. Accounts every day. I look for him. He's a cool guy. Okay. Send tacos. Keep listening. Yep. Felix. Hi, James. Did you answer the covered call on APA tonight? Apache. Ooh, that's a good company. APA. I like it when people give me companies that's actually on my list. All right, APA, first thing I want to take a look at. Check it out. 28.30. This is what I can buy it for first thing Monday morning. 28.30. So what's it 28.50 going for? 30 cents. That is over 1%. Great. So what is the chart telling me? Okay, 5 things. Remember? High, low, where was it? Where is it? Where is it going? Look at that. Ooh, I like that. Check it out right here. You would think that's the low of the year. Okay, so if you're going to make money in the stock market, you buy low and you sell high. Well, my friends, you cannot get any lower than the low of the year. This is why we're here every day. We're here every day we want to find. This is what we want to find. Look, there's your high of the year, 46. Here's your low, right there. So we want to take a better look at this. Okay, last 90 days. Okay, 90 days. First thing, high, low, where was it? Where is it? Which direction it's going? Look, Friday was 28. The day before, Thursday. Thursday was the bottom of the year. You can't get any lower than the bottom of the year. Now, is it the bottom of the year? Well, we really don't know because we don't know what's going to happen Monday. Now, for me, I like 2 days to the upside. Okay. Now, Friday was an up day. Well, it wasn't really an up day. It was a down day, but it was still a higher bottom. Okay, let's look at the last 30 days. Okay, check it out. Last 30 days. 30 days goes the high. She went down, she went up. She went down, she went up. She went down. She's going to the upside now. Okay, the 30-day bottom. Right there. Okay, the previous 30-day bottom was there. 1, 2, 3. It's going to the upside. And it will continue to go to the upside until it's done. All right, Felix, that work for you? Syntago buy 100 shares on Monday, sell a call for Friday. Strike price, the current price. Yep. All those. You guys are just like, sometimes you don't really need me here. With some stocks, you can get 1% premium for selling the call. Yeah, that's what we look for. We look for the 1% premium. Okay. What does he mean by the 1% premium? Well, simple. Right now, I can buy it 28.30. What's 1% of 28.30? Simplest way of doing it, you take the decimal point, move it over 2 places to the left. So 28 cents is 1% of $28. Okay, so $28.30, the closest strike price to this, because we're doing options, remember? We're selling somebody the right. So I'm going to buy it at 28.30. Sell somebody the rights to buy it from me at 28.50, which is 20 cents higher. So what happens if the stock goes above 28.50 next Friday? Well, that person who bought the option is going to buy all the stocks from me. I'm going to collect the 30 cents for the premium, and then I'm going to collect another 20 cents, which is the difference between the purchase price and the $28.50 strike price. Okay, so just keep coming back, keep asking questions, you'll get your answers. It's not that difficult. Matthew 24, Sermon on the Mount, ask and you shall receive, seek and you shall find, knock and it shall be opened unto you. Okay, it's written over 2,000 years, still true today. Seek and you shall find. Ask a question, it will be answered. Okay, next one. 50,000 per year. Cool. Yeah, you need about 100 grand to get 50,000 per year. But think about it, it's really not that difficult. Okay, so I'm 60 years old. I've been working since I was 13. That's 57. Wait a minute, no, 47 years of working. 47 years of working. Okay, I have a certain amount of money set aside. I get 1% off of that certain amount of money that I have set aside. That takes care of my bills. Great. For Nike. All right, Rich Cannon for Nike. Nike just is a no at the moment because we looked at the numbers. Okay, NKE, Nike. All right, Rich, take a look at this. 30 days ago, we're down here at 92. She goes up, makes the high at 98. She drops back down to 92, and then she shoots up to 97.18. That is way too close to the 30-day high for me. Okay, buy high, buy low, sell high. Okay, it's not low at the moment anymore. Low is down here. That was on Monday. Monday was a perfect time to jump in. Monday or Tuesday. Yeah, Monday or Tuesday. She might keep going up. You don't know. I don't like the way it looks. Okay, now there's over 300 different companies I can look at that would give me what I'm looking for. I like Nike, don't get me wrong. Okay, but she went up, she pulled back, now she's going up again. How much higher do you think she's going to go? She could challenge that 30-day previous high, but who's to say? I don't like the chances. I like Nike, but not this week. Centacos, thank you. So, do we hold or it sell, or how long do you hold it till? Interesting question. TC, James, what are your thoughts on the new DeFi stuff? Were you investing in collecting the cost? All right, TC, you got to give me the ticker symbol. Okay, I don't even think DeFi is it. DeFi, that's a Bitcoin ETF, and it has no option. So that's a no. All right. Centacos. This is a simplified version of the wheel strategy. Yep, he's correct. You can take a look at YouTube. What's the wheel strategy? It's a cool strategy. It is. But I don't teach the wheel strategy because I only teach the strategy I created for my 9-year-old. I want it to be simple as possible. Simple and safe as possible. Okay? Find a good company, buy it for a certain price, sell it for someone for the exact same price, and collect that premium. That's it. If I'm buying it for $18.38, I want to sell it for $18.38. I want to collect. All right, think of it this way, okay? Your residents, hey, I'm going to the store, pick up a 6-pack of beer. You want me to grab you something? Oh yeah, pick me up a bottle of vodka. Okay, great. I get back. It was $20 for the vodka. Okay, great. $20 for here's $2 for gas. That's my $2. That's my that $2. That's my premium. Same thing. Hey, I'm going to stock market to pick up some AT&T. Great. Pick me up 1,000 shares. For that privilege, I'll pay you 12 cents a share for doing that for me. Same thing. Think of it that way. Hey, I'm going to stock market. I'm going to pick up some AT&T. I'm going to buy it at $18.38. Okay, pick me up some too. All right, well, it's going to cost you 12 cents per share. I'm picking up 1,000 shares. That's $120. I'm buying it at a certain price. I'm selling it at the same price I paid for it, and then I'm collecting the premium. The premium is kind of like what I just explained. Hey, I'm running to the store. Pick up a dozen eggs. Hey, pick me up a dozen or two. Great. Here's what the eggs cost. Here's a little bit extra for your efforts. Same thing. All right, anyway, a couple more questions. How did you first learn to trade options? Is there a book you read to recommend? Yep, Wade Cook's The Wall Street Money Machine. Send tacos. If the price goes above the strike price, you are obligated to sell at strike price. Al, not necessarily so. Okay. Now the call option is the right, not the obligation. So if the stock goes up, the person could buy it if he wants to. They don't have to buy it, but if they want to buy it, then you're obligated to sell it to them. Okay, so you're right about that. For Nike, new shoes shopping coming up. Alrighty then, Richard, I get that, but the chart doesn't tell me so. All right. Oh, wait a minute, that's an interesting question. NKE, Nike, okay, last 30 days, okay. This is what the chart is telling me. It's telling me it's almost time to take profits. But what does seasonality tell me? What does it normally do this time of year? Nice. Check out the seasonality on Nike. Okay, this time of year, she does go up. But July to August. See that? July to August, she has a tendency to go up. Historically speaking, does that mean it's going to do now? Doesn't mean that at all. It only means that's what it did last year, the year before, the year before, the year before for 10 years. Okay, so yeah, it might be a good one. But for me, this here, 97.18, is a little too high to the 98 high. That's just me, okay? But you're right. Seasonality does show it going up this time of year. Okay, more questions. More questions. Mo. Wait, so you prefer selling calls instead of buying puts? Exactly, Mo. I don't like puts at all. Now remember, Mo, this was created for a 9-year-old little girl. It had to be simple. Call options were challenging enough for me to teach her.
Minutes, I'm going to teach you how to make more than the average bear. There are 5 keys. Key number 1, there are 156 companies paying over 10% yield this year. There are 250 trading days in a year. That's point number 2. And point number 3, you don't need to own stock for a whole year. That's just silly. You only need to own it for 2 or 3 days. Point number 4. Point number 5, rinse and repeat for the committee first taste.
Come on, she was so adorable. It had to be simple. It had to be safe, predictable, and consistent, and no way she could lose. So the 5 rules: never buy something you don't want to hold long term, never sell at a loss, make sure there's 20 years of increased dividends, make sure there's weekly options, and then make sure the numbers work. What are the numbers? The numbers are very simple. What can I buy it for? What can I sell it for? Okay, is that 1%? Great. What's the chart telling me? Well, here the chart is telling me not this week. Okay, I had to make it simple, safe, and predictable and consistent. Okay, so as much as I like Nike, even though the seasonality is pointing to the upward direction, okay, not for me. Sorry. And I could be wrong. I've been wrong many times. But I also make a consistent 1% per week for over 15 years. Average, I should say, I average 1% every week. Okay, I think there was 1 week this year I made 0.7. Ugh. Okay, so 4 times this year, 0.7, 0.8, 0.85, and 0.9, 4 times. But then again, I had some weeks where it was 2, 3, 4. I even had 1 week was 8%. That was freaking nuts that week. It was a gap up. It's like, holy cow. It was great. It happens. Okay, yeah, and I don't do puts at all. I don't buy, I don't sell, I don't suggest. Simple, safe, predictable, consistent. Remember those. All right. What do you think about DeFi investing and trading? We already talked about DeFi. Okay, it has no options. I only do stocks that have options and pay weekly. Okay. Good time to buy Walgreens, WPA. WPA, let's check it out. I like Walgreens. We've been keeping our eye on Walgreens, WPA, for the past couple of months. Okay, very first thing, Walgreens. Well, first of all, number one, Walgreens is in every major city in the United States. This is three big prescription drug people: CVS, Walgreens, Walmart. Okay. What can I buy it for? 16. The 16 is going for 62. That's freaking crazy. 16. If I buy it at 16, I sell someone the rights to buy it from me at 16. I collect 62 cents per share. That's nuts. All right. The high, the low, where was it? Where is it? Which direction it's going? That's the 5 things I want to look at on the stock. Okay. So, last 90 days. High, low, where was it? Where is it? What direction it's going? Here's the bottom right here. Now she's going to the upside. Okay. Now, even though this shows the 1-year chart, this is low for the 1-year period, I had been informed by someone in the audience that this is the low for a 7-year period. It hasn't been this low in 7 years. So you want to make money on the stock, you buy it low, you sell it high. Walgreens is pointing out to you, hey, we've never been this low in 7 years. Okay, yeah. So the pandemic and all this crap with the new administration is creating all this free crap because they don't want to prosecute. They're soft on crime, okay? Eventually, with the new administration coming in next year, we'll see what happens. Are they going to do anything about the crime? Okay? You can go and you can steal $900 worth of stuff and they're not going to prosecute you. That's why they're having a lot of issues with Walgreens and a lot of stores. Macy's, Walgreens, Nordstrom's, there's a lot of stores that are closing down stores because of the crime scenario. Because of the current administration doesn't want to deal with crime. Everyone should be able to steal shit. Yeah, don't get me started. Anyway, so yeah, Walgreens, a 7-year bottom. You can't get any lower than that. But it's a choice you got to make. Remember rule number 1, never buy something you do not want to hold on to long term. Check my question. Hakuna, it's the exact same question. Good looking man like you can't find a woman easily to travel with? Yeah, it's not as easy as you think, dude. Okay? All right, good time to buy Walgreens. So that was my answer right there. Al said tacos. If the price goes up, the strike, you own the stock. You can sell another call. Exactly. Felix, did we look at CAG tonight? All right, Felix, I'm going to feel a little bad about this. I have no idea who CAG is. So usually, if I have no idea who they are, it's usually a no. Oh, Conagra brand, 29. All right, so basically it's going to be a no. Why is it a no? Check it out. If I can buy it at 29, the 29 is going for 15 cents. That's not even 0.5%. That's a definite no. The numbers just don't work. Okay, if I'm buying it at 29, selling it at 29 for 15 cents, it's not worth my time. There are too many other good companies paying more. Okay, so think about it. If you have a choice, you have 300 companies. This company, it's a good company, don't get me wrong. Okay, Conagra Brands, but they're only giving you 0.5%. Look at the chart. Okay, the chart looks great. Take a look. Okay, 30 days ago, down, up, down. Here's your 30-day bottom. 1, 2, 3 days going to the upside. Great time to jump in, but I'm not jumping in at 0.5%. That ain't worth my while. Sorry, there's too many other ones that actually are better than that one, in my humble opinion. ComEd. I have no idea what ComEd is. Which one was that, Mo? That was Conagra Brands, CAG. I've never traded Conagra Brands. Check your questions. Strange, it's not showing. Yeah, seasonality favors the bulls. The first 10 days in July, summer low after July. Okay, Hakuna, I have no idea what stock we're talking about, but okay. TC following. Okay, thanks, TC. Uh-oh, I missed some questions. What state am I in? Uh-oh. Uh-oh. Oh, I love Chumley loves dividends. Thoughts on EPD? Hi, new here, confused. What is paper trading? Paper trading is kind of like monopoly money. Like Monopoly. Okay, you learn how to buy and sell houses playing the game of Monopoly. The game of life. Stock market is general historical study. Yep, you're absolutely right. The game of life, same thing. It's a game giving you some type of realistic news or whatever. Yep, it's fake money. Yeah, it's like playing Monopoly, but you're playing in the stock market. All right? Do I like it? Good, fine. Try it out first. I always tell everybody, before you put real money in, get a paper trading account, virtual, whatever you want to call it. Mo, W Grandpa. Gee, thanks. I am a grandfather. All right, Mo. Oh, we got two Mo's here. Mo with M-O and Mo with an E. Okay. What are weekly covered options you are going to sell to open next week? Oh, that's a good question. W Grandpa. Penn National Gaming to the Moon. Okay, Charlie. AC/DC, dead on. All right, Felix, thank you for that. How much will that call cost? I don't buy calls, I sell calls. Bo, you're adding the plus minus of stock prices from strike to figure your total return, correct? You're adding the plus or minus of the stock price from the strike. Okay, sometimes yes, sometimes no, Bo. It all depends on the numbers. Let's take a look at CAG for a second. CAG is exactly $29. Exactly. Okay? So the $29 strike is exactly. Okay? If I sell the $29 strike, I'm getting exactly 15 cents per share. Now, sometimes it might be $28.51 or $28.82, you know, a little bit off here and there. Then you add back and forth. But I base all my decisions on what am I making at the moment. If I'm buying here, selling here, collecting this, is that 1% or not? In this instance, CAG, it's not 1%. That's the one I'm looking at this moment in time. But yeah, it's all about the math. All about the numbers, Bo. That's APA, correct. No, this is CAG. APA. Okay, here's APA. APA is $28.30. The closest strike price would be $28.50. Right here, $28.50. It's going for 30 cents. It is more than 1%. If it goes at $28.50 or above, I'll get an additional 20 cents. It all comes down to the numbers. John Salim. So your dividend strategy is to buy the stock that is paying a dividend and sell it after the payout. No, John. Let me go back here for a second. Go to my calendar. All right, here's my calendar. My calendar tells me when a company is paying their dividend. The little green dots, those are the EX dates. There's 4 dates you need to remember. Date number 1, the announcement date. That's when the company tells you all the information. That's number 1. Number 2 is the EX date. That's these little green dots right here. Okay, that's the last day the stock trades before the dividend is paid out. Date number 3, the date of record. It is usually the very next day after the EX date. Date number 4, self-explanatory, the payment date when you collect your money. So, if I'm looking at Comcast on the 3rd of July, I want to buy it 2 weeks prior, which is the 17th on a Monday. Okay, so let's quickly take a look at what Comcast is going for. CMCSA. We took a look at this a little while ago. $38.50 to $38.50 is going for 47 cents. That is over 1%. Great. If I buy it then. Now, what's the chart telling me? Well, the chart's telling me here's the high of the year, here's the low of the year, here's where it was a year ago, here's where it is now, and this is the direction it's going. There's that 5 things. A lot of 5s going here, okay? That's the 1 year. So what does the 90-day look like? What's the last 3 months? All the last 3 months, same thing. Here's the high, here's the low, That's where it was, this is where it is, and this is the direction it's going. Okay, great. Now, what is it going to do next? To find out what it's going to do next, I like the 30-day chart, because tomorrow is going to be basically the same as yesterday. They don't change that much. Okay, 30 days ago, here we are. She drops down. From there, she shoots up, finds a 30-day high. She drops down. There's your 30-day bottom. 1 green day, 2 green day. Look at the distance between here and there. So where am I going to do? It's right there, 38.48, 38.53. Okay? So if I buy it here, more than likely, she's going to go to the top side. That's what I'm looking for. This is Comcast. Okay? 30 days ago, drop, up, down, up, and she's starting to go to the upside. Okay, so I buy it 2 weeks before the EX date. All right, so 2 weeks before the EX date, I collect the premium. Great. On Friday, does it hit my target? Am I out, or do I still have it? If I still have the stock, I will do it again here. Collect another premium. Okay, Friday comes. Am I out, or do I still have the stock? If I'm out, great. I have all my cash back. But if I don't, if it doesn't hit my target, week number 3, I'll get another premium. So premium, 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 dividend. That's like tripling my average on my returns. Because most people buy stocks, hold them for the whole year, and get 4 payments a year, once every 90 days. Because Comcast pays the first week of the quarter. The first week of the quarter. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. Comcast, first week of every quarter. First week, every quarter, 4 times a year, I look at Comcast. 2 weeks before the dividend date. Okay, the dividend date's here. I looked at it on Monday. It didn't work for us on Monday. Sorry, Monday, look where she was on Monday. She was still in the free fall on Monday. There's Monday here. This was Tuesday. No trading on Wednesday. It was Thursday. Thursday was the bottom. Friday, she's up. Okay, so great. Jump in on Monday. That's what it's telling me. Okay, Monday was the 17th right here. It didn't hit my criteria. So it was a no on Monday. But today, it is. For next Monday. Next question. Come on. Oops, too fast. Too much. You just answered my question, Tex. All right, Bo. Glad you like it. Felix. Thanks, James. How about CAG? CAG is a no. We already looked at that one. Numbers just don't work. And why is your chart going backwards? It's not backwards, John. Okay? This chart here is live on YouTube for your convenience. Because if you're on your phone or your iPad or whatever, you probably can't read these little tiny numbers. So this chart is live on YouTube. So it's not backwards. It just looks like it backwards. Not like that. What state are you in? State of confusion. State of tiredness. Actually, okay, be happy. It's the 10-minute trader on YouTube. Okay, so I've had the 10minutetrader.com for over 20 years. Now there's a bunch of people trying to copy me. Okay, 10-minute trader or the 10-minute trade. Yeah, a whole bunch of them out there you find very similar. Okay, but yeah, I've been there the longest. It's the 10-minute trader, the 10-minute trader. Rio Midiv. Hello, how are you? Mo, I just took profits on Nike. Might get back in on Monday. Mo, I don't tell people what to do, but I looked at the numbers and it didn't look that favorable. That's just my opinion. Okay, don't trust anything I say. Always do your own research. Make your own decisions. Do you know anything about Morgan Stanley? I don't know him personally, but the stock Morgan Stanley, First thing I want to look at, what am I buying it for? 1916, sorry, 96, 16 to 96 is going for 116. Yep, that's over 1%. Okay, so it meets that criteria. Now I want to check out the chart. High, low, where was it? Where is it? What direction it's going? I like that. That works for me. Okay, so let's look at the last 90 days. The last 90 days, first thing I want to see, the high, the low, where was it? Where is it? What direction it's going? Works for me also. Now let's take a look at the 30 days. Where do we think it's going next? Well, here we go. You ready? High, 102 and change. The bottom, the 30-day bottom right there, 94. She went up. Now she's going down. Okay, you saw it right there. High, low, up, down. It's going to the downside now. Felix, C-A-G, we already did. C-A-H, that's Cardinal Health. Cardinal Health is on my list. C-A-G is not on my list. Sorry, but C-A-H is on my list. Okay, C-A-H, Cardinal Health, 106.24. 106 is going, yep, that's a no. Sorry, the numbers just don't work. If I'm buying at 106, right, and I sell the 106 to someone, I'm getting 65 cents. That's not even, that's a little over 0.5%. Don't get me wrong, 0.5% might work for you because 0.5% per week is 26% per year. When have you ever gotten 26% per year on a company that you like? Why do I say you like it? Because you suggested it. Okay? If you suggested it, you might like it. If you like it, buy it, do all the things. Yeah, and ooh, look at that chart. Check that out. Okay, Felix, check it out. You ready? 30-day chart. High, low, where was it? Where is it? It's at the 30-day high. You think it's still going to go up? Hey, more power to you. Okay? That's more power to you. You know what? If you think it's going to continue going up, great. But eventually, look at all this down here. That's profit-taking material. Somebody, somewhere, bought it at 94. Okay, now it's at 104. They're going to be taking profits pretty soon. Because if you don't take your profit, it's not a profit until you take it. And nobody ever went broke taking profits. Okay, Neil, who creates the price and the options on the purple side of the screen? Oh, you mean who does these right here? That's the market maker. They have this really cool thing. It's called Black-Scholes Option Pricing Method. Look it up. You'll see it. It is this huge mathematical problem. It tells you how they figure out the prices for the options. It's called Black-Scholes Option Pricing Method. Okay, I don't even pay attention to that. When I look at it, this is what I look at. What am I buying it for? What am I selling it for? Is that 1% or not? It's not 1%? No. It's that simple for me. So you buy the call or sell the call. I sell the calls. Okay? I don't buy them. Buy them is risky because options expire. In this trading strategy, I don't buy them. Okay? Now, I have 6 accounts. I only share 2 of them with you. Other accounts, I really don't tell you what I do because that's different. Instagram, stock market, yep, I got that. Lost its dividend advancement. What? Tiny? Walgreens lost its dividend advancement? Hold on a second. WBA. I'm trying to figure out where the heck do I find that information. WBA. All right, Walgreens honors veterans. Walgreens boots performance so far. NASDAQ, blah, blah, blah. Would be the highest closed. Close at 16. On pace for the largest percentage increase since May. Currently up 2 of the last 3 days. 1.1 months. Yeah, it's not really telling me anything like that. Okay, so whether that information is correct or not about Walgreens. Jesse, yeah, okay, Jesse, I have no idea who you are, so I can't say yes or no. Thoughts on Krispy Kreme stock, long term, of course. Your idea of long term and my idea of long term, two totally different things. The longest I've ever held anything is 9 months. Okay, so if you want to buy Krispy Kreme and hold it for long term, I'm not the person to ask. Seriously, I'm not. Okay, I am definitely a short-term buyer. Okay, I buy, I make my 1% per week, I live off of that money, and then I do it again. Every week, week after week after week. It allowed me to quit my job early. Okay, I'm only 60. I just retired in November. Okay, so long-term is 30 days for me. Okay, so I can't answer that question for you. Your residence, seasonality favor the Bulls, first thing July. Yep, I got that, but I don't know which one we're talking about. Uh-oh, I missed all these questions. Jen was here. Okay, how is it going? Simba's going good. How are you doing, brother? Lovely. I don't do puts, that's correct. James, I know the basics now. I'm ready for option spreads. I don't do option spreads here. Okay, now option spreads have a lot more risk. Okay, because you're buying option and you're selling an option. Okay, there's a lot more risk. Okay, and you have to have a really good return to take. Yeah, no, sorry. I don't teach that here, but I do teach it though. All right, Al. It's from TikTok. Go watch on YouTube. Easy to see, correct screen. Yep. How do you get the premium you're doing selling puts? Okay, Tyrese, I don't sell puts. I sell calls. I don't like puts because they have that negative connotation to them, that negative vibe. And I'm weird. I like only positive stuff in my life. There's an old saying, garbage in, garbage out. Okay, good stuff in, good stuff out. Yeah, I always have everything positive. I like to keep everything positive in my life. And a put, you're kind of hoping the stock goes down, or you're trying to make somebody do something. So when you buy a put, you're forcing someone to buy the stock from you at a certain price. It makes me uncomfortable, so I just don't do it. I already own WBA. Wouldn't mind more if purchased lower. Selling the put better than calls this week. Secretariat, I'm going to agree with you. Okay? Okay, because you've been here for a while. You know where I stand on puts. And yeah, a put can lower your cost basis. But I try not to explain that here because I like everyone to be on the same page when they're starting. Okay, you've been here for a while. We have a lot of newcomers. Newcomers, I want to keep it as simple as possible. Safe, simple, predictable, consistent. And puts can just add something to the mix, makes it a little more confusing. What stocks can we short? See, you already see what you started, Secretariat? Okay, no, I don't do puts, I don't do shorts. I want to short some stocks. Yep, have at it, have fun. I don't do that here. I can't find your live stream on Facebook. I went to the 10-minute trade. Actually, it's under my name. Okay, and the 10-minute trade. For some strange reason, they don't allow me to live stream on Facebook in the Facebook group, the 10-minute trader. I said, nope, you can only do it on your personal page. So it's on my personal page. You're listening to the wrong guy. I don't short. Thanks, Al. I can always count on some of you guys. Jen! Hi, Jen. How are you? Okay, Jen. I hope things are going well. NASDAQ. Okay, Giovanni, I don't know what you're talking about. Premium percentage better at most buy strikes selling the puts. Yep, you're right. Realize you don't do puts. Better entry. Yeah, I hear what you're saying, Secretariat, and I am agreeing with you. I just don't like teaching it here because most of the people here are relatively new. And if you put calls and puts together and keep an eye on the stock price and make sure the option price is right, It's too many working parts. But you are right. By selling the put, you can lower the cost of your entry point if you're interested in dollar cost averaging down. You're 100% correct. But I don't do that here because it adds a couple more steps and makes it a little bit more confusing for the new people. Okay? We do option covered calls only. Thank you, Damon. Cool beans. Do I need to contact them? I have no idea if I contact who. If I want to start option trading, you have to apply to your broker. Yeah, you do. You have to apply to the broker in order to do option trading. But here's the thing: you do have to apply to be able. You do have to apply to be able to trade options. However, if you call your broker and say, I only want to do covered calls, it is the simplest and easiest and safest trading strategy out there. The best thing to do is sell puts on Spider. Yeah, Sydney, I'm going to disagree with you. Because Spider does not give you dividends. And when it goes down, you don't. Well, yeah, you do if you're doing that. But yeah, there's no way to catch any kind of cash flow from it other than constantly watching it. I prefer not to do that. Thoughts on the 155 strikes on Chevron, decent dividends, but next one is in 2 months. Bob, well, let's take a look at Chevron, CVX. Holy cow, it's 11:30, it's time to quit. So CVX is going to be the last one, and then I'm going to just answer questions. All right, this will be the last stock we look at, then we'll answer questions. I'm going to call it a night. CVX, here we go. 155.47. Okay. Oh, they don't have a 155.50. What a bummer. 155.47. 155s, I'm going for 174. I'm losing 47 cents right off the top. So you deducted 47 cents off there, it no longer becomes viable. The numbers just don't work anymore. Okay, it's less than 1%. Okay, look at the chart. Okay. Okay, we got a high, low, up, down, up, down, up. What's happening here? Look at the volume. Okay, the volume is freaking huge. That volume is really huge. Let's take a good look at that one. Okay, so the average volume, okay, look at it. The average volume, 6.7 million per day. 6.7 million per day. That means the market maker is making a lot of money. How much did he make on Friday? 21 million. So that tripled, little over tripled the volume on Monday. Why? Okay. Here's your high, drops down, up, down, up, down, up. Why all the volume and did the stock drop? Before you jump into that one, I would find out what this answer to this question is. But to me, it's a no because of, that and this. There's got to be a reason to it. All right, so no more stocks. We're just going to answer the questions, all right? James, don't blame me for the shorters. Yeah, I hear you. We do option covered calls only. Thank you, Damon. I missed a bunch of questions. Neil. All right. I already own it. Okay, got that. You don't want to short. Yep, got that. Yep, got that. Ooh, wait a second. Whoa. Felix, how about Intel? Ooh, I like Intel, but did you remember what I said? It's past 11:30. I'm just going to answer questions. So I'm not going to look at anything else. All right, sorry, Felix. If you want to take a look at Intel, I'll write it down, but you got to come back tomorrow. INTC, Intel. Tyrese covered calls. Yep, thank you. ARB. We looked at ARB already this week. Do you use Black-Scholes to build your black and purple screen? No. All right. Neil, we already went over that. The Black-Scholes pricing method, I don't pay attention to that whatsoever. I look at what I'm buying it for. What is the current option price? Is it 1%? It's a yes or it's a no. I don't really pay attention to the Black-Scholes. Don't. No. Any brokerage firm, yep. Okay, yep. Your residents, invite me to your other group, James, for the option spreads. Your residents, okay. You have to be a member of the morning trading group for at least 6 months before you get an invitation to the trading strategies that make more than 50% per year. You should be happy with 50% per year first. Get good with that, then jump up to the other ones. Now, the app, I would want to short, blah, 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 apply with your broker. Yeah, it takes quite a bit to go to short. The best thing to sell puts on, yep, Sydney, we already talked about that. Thoughts on the one strike on CVX, we already looked at that. Neil, blah, 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 don't pay for the shortage, yep, got that one. Okay, got that one. Got that one, got that one, got that one. I think we're done with the questions. We are. Do you do any trading specifically off of earnings? Oscar, absolutely not. And let me tell you why. Why is Bro constantly trading? SpeedFi? I have no idea what you're talking about. Okay, Oscar, the reason why I don't use earnings report to trade off of, because earnings have no consistency behind them. What do I mean by that? What I mean by that is I've seen positive earnings where the stock price drops. I've seen negative earnings where the stock price goes up. So you explain to me, if earnings was indicative of the price movement, so bad earnings stocks go down, great, more people will be doing it. Positive earnings stocks go up, more people will be doing it, but it's not the case. James, I know this, you said earlier that I could join. Yeah, but you got to join the morning trading group first and be a member at the morning trading group first before you get the invitation to the other ones. All right, so it's past 11:30. We ran out of questions. Streaming, thoughts on Krispy Kreme. Yeah, sorry. McDonald's, we can take a look at that tomorrow. Buy cheap volume when implied. Okay, yeah, don't even pay attention to that. All right, thank you for the view. You got it, Oscar. SpeedFi, McDonald's. Yeah, we'll look at it tomorrow, but not tonight. All right, you guys have a great night. It's past 11:30. You guys have fun. It's been enjoyable. I hope you guys learned something. My number one takeaway for this, does it make sense? That's it. Does it make sense? If it makes sense, great. Come on back, learn some more. If and when you're ready to join us on the morning trading group, fine. Let me know. I just blessed you, McDonald's. Well, good for you. Have a nice night, everyone. And finish. Done. And done over here. Yep. And now done over here. Bye, guys. See you again later tomorrow. That one's done. Oh, this one's done. Post for 30 days. Okay. Whoops. All right. Damn it. That one. And you are done over here. Okay, now, ladies and gentlemen, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for a safe, predictable, consistent 1% per week. It is June 22nd, Saturday night. Have a great night. See you again tomorrow.